Hello, hello. Mic check, mic check. Good morning, everybody. Before we begin with the session, I would request you all to please keep your phones on silent mode. Thank you. So, ladies and gentlemen, welcome to the Seamless Blockchain in Jaipur. I am delighted to see so many enthusiastic faces ready to dive into the dynamic world of blockchain technology. Blockchain is a decentralized digital ledger that securely records transactions across multiple computers, ensuring transparency and immutability. This technology underpins cryptocurrency like Bitcoin and has far-reaching applications beyond finance, including supply chain management, healthcare, and many more. We started a series of knowledge on blockchain recently, which we commenced with a 2-day hackathon event in Jaipur location, where tech enthusiasts from diverse backgrounds came together to innovate and solve real-world challenges. Today, we gather to explore the forefront of blockchain technology, sharing insights and fostering collaborations. This event is a unique opportunity to engage with industry leaders and experts on the latest advancements, trends, and applications of blockchain. Before we begin with the session, I would request Mr. Shaleen Madan, co-founder and CGO of Formidium, to introduce Formedium and also share the new ad of Formedium with all of us. Can we have Mr. Shaleen Madan on stage, please?
Thank you, everyone. Thank you for attending the inaugural Seamless Blockchain Conference here in Jaipur. Special thanks to the Formedium team for putting together this conference. Good day, and welcome to the Seamless Blockchain Conference. My name is Shaleen Madan. I am the co-founder and chief growth officer of Formedium. It is an honor to stand before you today as we celebrate a significant milestone in our foundation day. Exactly 8 years ago, Formedium began with the simple yet powerful idea that technology could revolutionize the fund administration industry. From the very beginning, I saw the vision at Formedium and believed in it wholeheartedly. However, I knew it would not be without obstacles. With my unique experience as both an Indian and American, I understood the nuances of both cultures and recognized the potential to blend the best of India and America. This dual perspective has been instrumental in driving our innovative approach, and I believe the results after these past 5 years in particular speak for themselves. Today we are thrilled to unveil our latest advertisement. This commercial is a testament to our dedication and pioneering spirit and outlines our vision. Thank you for joining us on this remarkable journey. Enjoy.
Tomorrow's challenge isn't waiting. Neither is Formedium. Our global.
Can we start? Yeah.
The world we live in grows more complex every day. New technologies, new opportunities, new ways of keeping ahead of the game. Formedium creates technologies for the future of investing. Unique solutions that move at the speed of business. Is your organization prepared for tomorrow's challenges today? Because opportunity isn't waiting. Neither is Formedium. Our globally distributed operations provide rapid response times, addressing all client requests in under 24 hours. That's one reason why Formedium is the fastest growing fund administration provider in the world. It's not just incomparable service that's made Formedium the premier choice of fund managers of all sizes and asset classes, it's also years of continuous development in proprietary end-to-end technologies that transform complex tasks into intuitive solutions. Formedium offers next-generation fund administration, digital multi-jurisdictional investor onboarding, CFO-tailored consulting services, comprehensive tax reporting, as well as a thriving community where fund managers and service providers are showcased and shopped. Through this exceptional suite of services, Formedium's digital prowess becomes yours, growing your business into a bold, complex and exciting future for funds of all asset classes. From digital assets to hedge funds, private equity, venture capital, real estate and CTAs. As the future breaks upon us, how will you adapt along with it? Evolve with the future. Be formidable. Formedium. Adapt and prosper.
Thank you.
Thank you so much, Charlene. Now I would like to call our first keynote speaker, Mr. Sushil Agrawal, founder Aavas Financiers, who will tell us how can blockchain business scale up with regulatory framework. Please join me in welcoming Mr. Sushil Agrawal.
Hi, good morning. It is a great honor to be here today at this distinguished blockchain conference hosted by Formedium. I'm not a blockchain expert, so first caveat from my side. When Nilesh asked me to be here and give me a keynote speak, I told him that I can tell how this blockchain can do a turnaround and help India and other businesses reaching 1,000 times scale. And I can share my journey also in between. Alongside some of my beliefs on regulation side, because everybody see regulatory environment from a different perspective and different mindset. But since I am in this industry from last 22 years, so how I have perceived and how I see it from a different perspective, so that I will share. And then lastly, some of the use cases, how blockchain can be $1 trillion capital provider to India in next decade. So yeah, hopefully that will help all of us to learn on this. I started my journey in 2001. Me and Nilesh, we passed out same batch of CA 2000, around May 2000 year. I did my first 10-year job at the ICICI Bank. Fortunately, I became country level manager within 5 years. So from branch to country level in first 5 years. I left the job at the age of 32 and started Aavas Financiers. We started this journey with $1 million. And in next 10, 12 years, we reached to the scale of $3 billion. In that journey, we were partnered with private equity guys. And fortunately, God was with us, so we give lots of returns to both the side. First investor was AU Bank. They have given us almost $25 million, for which we paid almost a $500 million return check. And another investor was Kedar and Partners, almost 1,000 crore rupee, for which again, almost $2 billion return in 5 to 6 years. Last year, I left the bank and started my new journey. In the new journey, I have two separate visions. So first vision is, again, I see long term, so $100 million to $100 billion journey in the personal side. On the business side, we are creating a pan-India setup, which will be the largest BFSI sector service company in India. So during my entrepreneurial journey at Aavas, I made a firm belief, which I will narrate here. say large-scale businesses require large-scale capitals. And large-scale capital require regulated businesses because large-scale businesses require large public money, and large public money require trust. So if you have more regulated business, you will attract more public money, which will help you scale large-scale businesses. So every time a regulator used to create a new regulation, and I was very positive, oh, we got another 10-year life for this industry. So since we came from a housing finance industry, basically mortgage industry, when we started the journey, it was 28 licenses in India. And then market opens up, regulator brought lot many regulations after 2008 crisis across the world. Then we have this regulatory framework, which is SARSAI, SARFACI, etc., which has helped creating more confidence in the industry. And today it's 138 licenses. And earlier, like you will heard only maybe 2 or 3 names, HDFC Limited or maybe Diwan, only 2-3 large scale organizations in India. But today, if you will see in that market, more than 50 companies are listed now. So, and almost $1 billion plus size in India. So regulator, if entrepreneur takes in a right spirit, helps the entire sector grow. At the same time, it also provides capital because most of the time whenever I go, people are struggling with how we will get more money. But more money comes with more trust. And more trust comes from when people feel, here I will not lose the money, or somebody is watching it. So that's the regulatory perspective, which I think most of the industry, if it start from seeing that way, I think that will help. Now, blockchain. So I heard this 7 years back, this concept of blockchain, and when we were starting our journey on analytics side, and we were also dealing with large public sector or public investors. So whenever you go to Boston, San Francisco, or on the side of London side of the business, they, in the entire conversation, after 45 minutes pitch, they will ask, are you using blockchain? And I was like, we are chartered accountant, we know business, this, that, we are using technology, but not. But when we started seeing that as a perspective that everybody is interested, I found a use case, I will tell you. Like in India, today we have 150 crore population. And a family, if you will take 5 people, so around 30 crore families are living in some houses. So around 30 crore houses are there in India. And today, total housing loan mortgage in India is only 3 crore, so which is 10%. So it took us 75 years to reach that level. But 3 crore translate into 30 lakh crore rupees of industry. But if you see most of the developed countries, there this penetration is more than 70%. And what is the reason? So if you will see in India or maybe all developing countries, there are certain things which are very easily available. So in India, if you have car loan, it's a 5 minutes job. If you will take another loans, this is again 3 to 5 minutes job. And in India, 5,000 NBFCs are there, which gives the car loan or personal loan. But housing finance, the way I've told you, it's less than 100. Again, if it's sizable players, only 20. So what was the reason? Reason is when you take a car loan, on the registration card, it's mentioned, so this car is financed by this guy. So there is a transparency. So there is no fraud in between the financiers or no multiple funding on the same asset. But that is not available in India for the property. And most of the developed countries, developing countries. And how it translates, I've told you, it takes 75 years to reach 10% of the penetration. And now 15 states has digitalized their land records, but still another 12 states still needs to do that digitalization of the asset. But with the blockchain, if that transparency and trust can be brought in the transactions and the land ownership records, I think that will be game changer for India, because if we reach even from 10% to 50% penetration, it will unleash $1 trillion of capital. Because most of the India population, their capital is in mostly their residences or properties which they have got, but which cannot be commercialized because there is no finance available because of the trust factor and the reach available. So this is one use case, but it has that much of potential. And again, once that can be changed, and which I'm hoping some of these kind of Formedium initiatives, like on the blockchain, and government is also now getting more favorable to these kind of things for a specific use cases. Might not be blockchain for crypto in India, at least at this point of time, but these kind of things can change the entire landscape, the way we see entire business. But again, there is, I think, university and all those environments, there is a blockchain still is not the main subject line. Like now AI is still there, but blockchain still needs to be developed that way. This is one use case, but again, the another use case can be in India is healthcare sector. Today we go to one doctor, we do some checkups, etc. Again, that is lives there, and then again you go to next doctor or for next event, we don't have the records. So blockchain again can revolutionize, I think, the healthcare sector in India, and maybe it have use case in each of the sector, but we need to identify the potential. But from the financial side, I told you, even for a specific property segment case, it can be $1 trillion market size in India, which is a very large, and across developed nations also, I think it is not reached that level, because India is good at even copying it. So in some of the cases, if it is reached to next level, this can be also done in India. At Formedium, I think they are revolutionizing this entire piece of accounting, hedge fund, cryptocurrency, tax side of it. And I was discussing with them, can we replicate this in India? Though it's still, as per the team, it's challenges because Indian market is not receptive or that much of not evolved in this side. But I was telling Nitin and team that India will have now $50 trillion in next 25 years. So this is the market where Formedium should also create similar kind of size in India and similar kind of expertise, because I think US and US market, you have developed a very significant capabilities, and those can also be utilized in Indian market going forward. I wish Formedium team and the entire population here best of luck and a very good future. Thank you.
A heartfelt thank you for your valuable insights. I would request Mr. Nitin Somani, co-founder and CEO of Formedium, to felicitate Mr. Sushil Agrawal. Moving further, next we have in series Mr. Maheen Gupta, founder and CEO Liminal, who is going to enlighten us with liminal experience building digital custody in a regulated environment. Can we please have you on stage? Before we start with the session, I would request Mandhar Matre to felicitate Maheen Gupta. Please.
Thanks, everyone. First of all, thanks for the facilitation, and thanks everyone for joining us to hear our journey about liminal regulated custody. First of all, I'm little sleep deprived, and generally I'm not good at public speaking, so please bear with me. But first things first, really appreciate the whole Formedium team to bring together this event. We need to do more of these events. We need to educate people more around blockchain. Some of the things that I hear from conversations around the water coolers, that blockchain is this, blockchain is that, digital assets, cryptocurrencies, something like, some people treat it like ghost because they don't understand it, they fear it. Some people treat it like some god. It will solve all the problem. It will solve poverty and everything. To me, in all honesty, from my perspective, blockchain and both digital assets are something that is going to touch, enhance, and accelerate every aspect of finance, every aspect of money, and every aspect of fintech in general. In next decade, we are going to see a much more enhanced finance, much more enhanced fintech, much more enhanced money, and you would not even realize that blockchain is powering it, because blockchain and digital assets would be ubiquitous the way you are using internet right now without even thinking about that you are using internet. And the way I see it is, initially in early days, 90s, when internet was launched, the problem statement was how to access internet, and you would go to cyber cafes and then try to access internet. You would go and install a modem in your house, and then you will try to access internet. But now internet is so spread, so available. You are using internet and you are accessing things with internet and without even realizing it. I think the same thing is going to happen with blockchain and digital assets. The underlying technology is very, very powerful. So very, very looking forward to the next few years of this industry. But for myself, I'm Maheen Gupta, just giving you my background and something around liminal. I'm Maheen Gupta. I have spent 12 years learning about Bitcoin, blockchain, digital assets, and cryptocurrencies. I founded Zeppay back in 2014. And now I am building Liminal along with my team here. We are building a custody infrastructure for blockchain and digital assets. What is custody, and what is custody infrastructure, and why you would require it? So, as Sushil sir pointed in his talk, that people are using it, or the real use case would be around real estate tokenization. There would be use case around healthcare, there would be use case around insurance, and so on. And as he rightly pointed that if you want large capital and bigger institutions to be involved, then the space needs to be institutionalized. The space needs to be regulated, and the space needs a lot of infrastructure to operate into. So if large capital comes into, then they would require trust and regulation and certain expectations from the ecosystem. Custody is just one piece of that ecosystem, which is what we are building. So in a traditional term, if you have used your mutual funds or shares, then you have a demat account, which is your CSDL or NSDL account. That is basically a custody account that you are using to store your securities. When you are using digital assets, then you use something like a wallet, a blockchain wallet, or a MetaMask, or a self-custody wallet, or a custodial account from an exchange, and so on. But that is more retail, that is more experimental. When you are an institutional, and at that time you want to use blockchain and you want to deploy large amount of capital for the various use cases, at that time you would require an institutional grade wallet or a custody provider. That is what Liminal is building. Liminal is regulated across the eastern part of the world. We have regulated licenses in UAE, Abu Dhabi, Dubai. We are getting licensed under Singapore, under MPI license, and we are also going through licensing process in Taiwan. And of course, we are the only custodian who are registered with FIU India, the only registration or license available as of now. And we are also working with IFSC GIFT City to launch tokenized assets custody platform, where the use cases like real estate tokenization and healthcare would be hosted. As of now, Liminal has helped secure more than $10 billion worth of transactions with more than $800 million of assets under protection. We have 100 odd customers across 17 regions in the world. And some of the biggest names that in India you might have heard, WazirX, ZepPay, Central Bureau of Investigations. We are proud to help and serve CBI. We are the official custodian for CBI India. And some of the biggest names across Southeast Asia like M2, XREX, and other big exchanges use our infrastructure. So why we started building digital asset custody? In 2012, when I started using Bitcoin, blockchain, or in general wallets, at that time the space was very, very nascent. It was not secure. It was very inefficient and absolutely not compliant at that time. It was very painful to interact with blockchains. I could not see at that time that there would be banks who would be using this technology, because the technology was so nascent. But running from there and looking at today, I think the technology has advanced so much. Now this asset class, the cryptocurrency asset class, is around about 1.2 trillion or around about $1.5 trillion. But the bigger blockchain and tokenized asset class, as per IMF data, they are expecting that by 2027, blockchain assets and tokenized assets would be 10% of the world GDP. World GDP is around about $110 trillion. That gives you around about $10 trillion in tokenized assets. And $10 trillion is a huge number. So if you just look at cryptocurrencies or digital assets as the blockchain, then I think that's a misconception. You need to look at that blockchain as a technology can power much more use cases, including real estate tokenization and other things. So when you want institutions to use such technology, then you need the basic infrastructure in place. Our bet was that because blockchain's first use case, the low-hanging fruit, is money, finance, and fintech, this space would be regulated and it would be required regulated infrastructure. With that vision, we invested a lot of resources and a lot of money into building regulated custody infrastructure across the eastern part of the world. Liminal provides more secure, efficient, and compliant infrastructure For an example, as a custodian, we have acquired several licenses such as ISO 27001, 2771, Associate Type 2, GDPR, CCSS Level 3 certification. This shows our commitment to regulators also and to the institutions also, that the platform that you are going to use is bank grade platform. Normally banks would have similar type of certifications. Our platform provides you $50 million worth of insurance in the digital asset space. We also use a lot of AML CFT compliance tool with our in-house compliance monitoring team to provide you a compliant infrastructure when you are using digital assets. With that thesis, sometime in 2022, we started focusing on India because we genuinely believe that in India, the blockchain can actually power the next generation of financial use cases. In India, generally, the current perception is that Bitcoin and cryptocurrencies are the only use case, but there are a lot more use cases that is being happening. In fact, Manhar, who is CEO of our Liminal India, he is working with Gift City IFSCA to build a regulated custody infrastructure for real estate tokenization platform. He is working with platforms like Risers and several other to tokenize real world assets on top of the blockchain. In India, generally, we have seen that while digital assets or cryptocurrencies take most of the news, and people may think that the regulators are not positive about it. What I have learned with a lot of our interactions with regulators is that what is their problem statement is that how any technology can provide benefit to India. And we have started seeing regulators trying to understand how actually blockchain use cases can translate into benefit to the last mile users or last mile end users. With that, I'll call Manhar, who is leading Liminal India and CEO of Liminal India, to give some idea around our efforts on how we are helping institutions to adopt more and more digital assets.
Hi, thank you for that, Mahin. I think the regulatory situation in India for digital assets has been extremely interesting. And I remember way back in 2021, in the month of February, the Parliament, this Lok Sabha bulletin came out, and it had a very interesting point. They said that they want to, as one of the main points of discussion in Parliament, they want to figure out a way to prohibit private cryptocurrencies. And when we as the industry, when we looked at that notification, we realized what a big information gap there was in the minds of the regulator. They were looking at these blockchains or these cryptocurrencies as private cryptocurrencies in the context of a public company versus a private company, where a public company is a government-driven company or a government-driven body, entity, institution, and a private company is something that's driven by private individuals for business, for profit. They were trying to apply that same principle to blockchains. But if you come into the blockchain world, a private cryptocurrency has a completely different meaning. It's a cryptocurrency on which, even on the public ledger, you will not be able to see the transactions. It completely hides all the transactions. And these private cryptocurrencies, there are very few. There are two of them, like Monero, Zcash, etc. And they're made primarily to ensure that while the transactions are decentralized and they are driven on sort of public ledgers, there is some amount of privacy still involved, and you will not be able to even trace the wallets who are initiating these transactions. Okay, so that was a big shock for us as part of the industry to know that here's a big bulletin going out and it comes with so much misinformation. Back then I was a part of a centralized exchange, and we realized that we had to really come together and do something about this, this very big and gaping hole, this big gap in the understanding. So we started getting together and we started forming industry associations. Prior to that, see, the interesting thing is if you look at this technology, if you look at all the builders, startups, founders in this space, they are all tech guys and techies who are very young, who come from that background with very little understanding of how policy works, of how regulations, in some cases, how a lot of people don't even understand regulations, etc. Right? These are all new concepts to them. They are very, very deeply sort of, they're deeply entrenched into technology, into coding, into building software, so on and so forth. There's a big world out there. So we started now changing this thought process. We started, previously there was a lot of fierce competition between the startups who were trying to, outnumber each other. We changed that. We tried and got everyone together. And then we tried trying to form an association. We realized that we were trying to, go with a institution which was already created, which was not a crypto-specific association, not a crypto-specific, organization. And we tried several initiatives in that duration. Fortunately, unfortunately, we've seen all the regulatory interventions that have happened on this space in those 2-3 years. So the tax guidelines have come in, the whole advertising guidelines have come in, certain requirements have come for cyber security, etc. And a lot of things has progressed to finally to the point where today entities can get registered with FIU, and they actually have a certain amount of legitimacy where they are reporting transactions to the government, and the government now feels very comfortable working closely with these businesses. So the point I'm trying to make is that in the India context, regulation has been a very important part of this business, and at Liminal we understand this really important piece, right? And because we have been trying to build a regulated business right from the outset, and we want to attract that large capital, we want to get the confidence of the large investors, we want to get the mass adoption, also driven by institutional money coming in. We've been tackling this head on, and we are now the founding members of a crypto-specific association which is called Bharat Web3 Association. With that association, we try and work extensively with a lot of regulators. We also do a lot of interesting things because we have this unique vantage point of being a APAC MENA player with licenses in UAE, with licenses in Singapore, with license in Taiwan, etc. We are able to bring all of these learnings. We are able to condense all of these interesting insights, and we become a sort of channel even for the regulators for a lot of this information. How do these things work in those contexts? Can you help us with some documents? How did you get, what was the licensing process like? So on and so forth. So we've been, I think there's a lot of credit to give to the regulator as well. They've been very open. They've been very approachable. They've allowed us to be a part of several closed door conversations, and we've had lots of open discussions where we've been able to openly voice even criticism against them within that forum, right? So that has been one of the key things that we've driven at Liminal. Of course, other than that, security, etc., remains key, and we hope to keep continuing with these dialogues. I think events like this also, they help so much to try and bust the myths. A lot of people think crypto is all about scams, frauds, and you only hear very two distinctly polarizing voices. Like Maheen was saying, it's either a ghost or it's like God. But there are a lot of things in between, and there's a lot of stuff. At the end, the bottom line is that this technology brings a lot of promise. It brings a lot of promise to make markets more efficient. It brings a lot of promise to make transparency, real-time transparency. It brings a lot of promise to get faster settlements, a lot of real-time information, and effectively really changing the way we transact with each other. So Liminal is going to be doing all of its efforts, and I hope Formedium also continues to push, and we will together make this technology a huge success in the country. Thank you.
Thank you, Manhar and Maheen Gupta. We are definitely encouraged and enthusiastic by your faith in blockchain and how it would power everything in finance. I would like to request Mr. Manish Agrawal to come on stage and felicitate Manhar. I'm going to call out our panelists. Pranav Sharma, founder Agna and Woodstock. Tarun Modi, partner Ramanand Goyal and Company. Kiran Deshpande, ex-CEO Tech M, founder Mojo Network, Thai Global board member and angel investor. And Shaleen Madan, CGO and co-founder Formidium. On stage, please. They are going to talk about investors' perspective and opportunities.
Hello? I have my phone out because this is what I use for asking questions. No more pen and paper. So we'll start. Panelists, so we have distinguished panelists. Kiran, could you introduce yourself maybe a little bit more in detail in terms of your experience and specifically your experience around blockchain?
My name is Kiran Deshpande, as you've seen around here. My last startup or the company was Mojo Networks in secure Wi-Fi space. Before that, I was CEO of Tech Mahindra and grew the company from where CP and others have created a huge company. My founding days were in TCS in research and technology. And I bring a database and computer science background. To me, blockchain is integration of several techniques that have existed in computer science, a database technology, be it distributed data, be it privacy, be it control, using cryptography. And I was very encouraged with the previous two, the Keynote and what the liminal founders said about the going beyond cryptography or Bitcoin for blockchain. So that's what I'm bringing on the table.
Welcome, Tarun. And the question was, can you discuss a little bit about your background and specifically around blockchain investing?
Yeah. Thank you, Shaleen. So about the blockchain. So basically, whatever my experience with blockchain, I have started from 2016 onwards to my foray into the blockchain, and basically I'm into the consulting businesses. I'm right now into consulting businesses that how to create your org structure, how to follow the law, or how to follow the legal formalities to come into a blockchain business. So the first tranche of blockchain, as you also know, Shaleen, was a bit of hype about the cryptocurrencies, because cryptocurrencies are the one who has actually made a blockchain alive today. So till 2019, I may say, it was a hype around everybody is going into Bitcoin and Ethereum. But post that, we have seen a remarkable revamp in a good tech or good solutions are being started developing on a blockchain. That is where the world has came around, the tax has came around and started developing good products on a blockchain. That actually has kicked off a demand of regulations in how the businesses shall work on blockchain, because blockchain provides you the solution which are borderless. It's all over the internet, right? So those regulations has been capped, keep coming in. Various countries has been discussing in over above it. I have been part of that 13-member committee which has been formed by ICI to consult the various stakeholders like SEBI or Government of India, that how the blockchain regulations or per se crypto regulation should come in, because government is very, very comfortable with blockchain. If you go to the website of Niti Aayog, you can find that Niti Aayog has planned to implement blockchain into each and every government ministry down the line in next 4 to 5 years. But somehow there is a bit uncomfortableness with crypto. So let's see how that progresses with the regulations, but that is my forte.
Pranav, same question. Discuss your experience and specifically around blockchain, and when did you actually start getting interested in this?
So first of all, such a pleasure to be here. Great stimulating conversations, great keynotes. And I can say, what I can say from my experiences is these are like real conversations which are happening here. And a lot of conversations I hear in crypto conferences are unreal, a lot more idealistic, a lot more speculative, I may say. So I would say congratulations for putting it all together here. So my journey in blockchain started in 2016, and that too, I'll probably add a bit of a narrative there. That started, with my brother completing his MS from New York University. And then he came back to India and he was like, in India, let's say, so I'm also from Jaipur, much like Mahin and many of you. So he was like, Bhaiya, which is like, brother, have you looked at, Bitcoin? This is a financial instrument. And by that time, I had been in financial services, private equity, as an asset management, structured finance, SME insurance, etc., for good 15 years. And I was like, I've seen it all. What are you talking about? And the next thing is, he was like, why don't you read a few blogs? Trust me. So I'm using the word trust, which was, which came as a common thing in the keynote. And of course, I trust my brother. There's no doubt about it. And I read those 4 blogs. And the next thing is, I landed up, ordering few books, reading them. And I just landed up bunking my well-paying job wherein I was on a rise in corporate world. And I realized that, this was creating, I was trying to figure out what is it doing? What is this Bitcoin, cryptocurrency, etc. doing? In my simple mind, I just, I typically try to make things simple because it's easy to create a memory tag and see that how you can commit to something. So in my mind, it came as 2 words, participative economy. So I realized that this is creating a participative economy, and what's happening in the overall, let's say if you look at world at large, in my experience is that if you get people to participate, it is much more valuable than having, let's say, billions of dollars in their bank account. And that was a huge insight for me that here there is a technology that creates a mechanism for people to participate effectively. And all the cases that you're seeing, whether the compliant use cases or the speculative use cases, it is all hinging on a very common theme that it's about participation and expression for people. They want to feel belong to something, either a community or let's say they want more capital or they want to be part of something which is rising, whether it is a blockchain or whatever it is. And that changed my worldview. So I landed up advising a bunch of startups. One of the startup I was supporting was creating wallets in very early days, let's say, and they were securing data so that individuals could monetize their data, whether it is healthcare data, whatever it is. And this was invested in by Tim Draper, Mark Benoff. So definitely it was going on a certain trajectory, huge learning. And then a bunch of other startups and early blockchains, Zilliqa, and those were the blockchains in those days. So very closely interacting with the leadership team there. I was investing in personal capacity, and the way my thought process has been, and Mahin knows this very well. We have interacted multiple times. Is that I always look at what is enough, how much money is enough. So my philosophy is more Eastern than Western from that point of view. And in many ways, the money that I made, I was like, this is enough, so I need not start a fund. Because starting a fund means that you're accepting somebody else's capital, and there is a moral and ethical fiduciary responsibility as well to return the capital at least multiple times, more. But having said that, met amazing, folks who are part of Woodstock, Himanshu, who looks at the fund management side of it, Rajesh, who looks at the legal side. And then we landed up, setting up Woodstock. Indrajit, who's there in the audience, also joined us. He focused on, so, I pulled him from the corporate world, so he was working with me in Aditya Birla Capital. And, I told him that, hey, I need to fix AML. AML, we cannot have even a 0.1% deviation. It's a zero deviation. And those were the heydays wherein people didn't care about AML. Nobody cared about having fund licenses in place. So Indrajit and I worked very closely to see that we had absolutely robust, documented AML processes. We had our funds, compliant and set up in Cayman, wherein, let's say, we still remember that we were educating them what kind of policies and procedures they need to put in place. This was, way back in 2018 abouts, because it was still sketchy at that particular point in time. They were very, so when you're talking about India, I'm just talking about Cayman, just to share that for every regulatory research journey, just to give that comfort, to the audience here as well. And we put, so banking was difficult. Getting a banking also required you to have a license in place, bunch of checks and balances, extremely expensive. But our North Star was very, very clear that compliance first, And I was, sharing with Sushilji just before I, walked up here, is that institutional trust is only built, when you are compliance first. So anyways, the journey began. Woodstock was a pioneering fund. We have 3 funds, 2 in Cayman, 1 in US, have made, let's say, about 80, 85 investments, so far, have returned, multiple times capital in the fund 1. We're still sitting at multiples. Hopefully whenever the bull market, arrives, we should be exiting, handsomely there as well. Fund 2 is also, doing well. Now, I think one limited point I wanted to address is Agna, because I think that is also part of my introduction as to Agna. What is Agna? So Agna, of course, means, I think this is also important for the audience who's looking at blockchain a lot more objectively in the context of fintech, capital, etc., is that the action is shifting very sustainably from the west to the east. That means that, this audience, when you're talking about $10 trillion and more, a lot of this capital formation will happen in these markets. West is very saturated. It has its own, issues, etc. I will not take too much of time because I know there are many more questions to respond to. But the bigger piece which is happening is convergence of various emerging technologies with blockchain. So blockchain AI, blockchain AR, VR, which is looking at, gaming as a very important category. So in many ways, starting my journey from Bitcoin, and subsequently setting up a fund, having advised and invested into a bunch of things, now seeing that how the regulated space, all of this is coming under the purview of regulation, has been a phenomenal journey too.
Yeah. I will mention that we at Formedium do very much care about AML. Real quick, it would be rude of me to not introduce myself. Of course, I am the co-founder and chief growth officer of Formidium. But previous to this, I was a macro investor, hedge fund manager, running a Bodhi Tree asset management, which is my hedge fund. And I have about 24 years of allocation experience in both fund of funds, hedge fund of funds world, and I managed a family office for many years. In 2014 is when I really started getting immersed in the angel investing community in Silicon Valley. And my journey in crypto really began watching in amazement, frankly, the rally in 2017 around Bitcoin, thinking, what is this? And, just based on the way I look at things is I really like to, I'm a value guy. I wait for things to crash and then I start trying to pick up the pieces. Really 2018 and 19 is when I began my journey. And I came to the conclusion that my most solid vehicle to take advantage of this opportunity was actually Formedium. We call it the picks and shovels or rails of the business. The philosophy was, I don't know much about this space, but everybody needs an accountant. So there was a real push to the team in terms of building technology around being able to handle crypto, Web3, blockchain investing, and a real push on the marketing side. So I don't want to take up too much time on myself, but I wanted to introduce myself. The panel today is about investment opportunities. Okay. I'm going to just make this open forum. So if you can answer, you can answer, and we can go to the next question. What has happened in the last 2 years? We've seen pretty substantial, let's call a spade. We've seen a pretty substantial drop, a decline in interest in Web3 and blockchain investing, funding, valuations. Now, to be fair, this is probably part of a general drop in valuations across technology, maybe putting aside artificial intelligence. Perhaps, you can opine in terms of what you attribute the last 2 years as being. How long do you think this winter is going to last? Is this just like the other winters that we've seen? We've seen several winters in Web3. Tell us. Kiran, why don't we start with you?
Actually, if I put on the investor hat, it's a good time to invest in deep technology because you can find valuations which are attractive. Obviously, all other criteria for investment, if they satisfy and somebody is in the blockchain area, I would just say one thing, Shalin, here. If you look at blockchain, let's say look at 2006, 7, 8, whatever, and then those set of techniques gave rise to Bitcoin as a application use case. It has sort of overshadowed the basic technology. So people's nomenclature is Bitcoin and not blockchain. So whatever misconceptions, like what I think someone from Liverpool was saying, those have impacted the development of blockchain technology as a ubiquitous way. If I compare it to, say, databases in the 70s, after Court's paper in 1971, next 15 years, relational databases were ubiquitous in most of the applications. I would have loved to see that happen to blockchain from 2008-9 to 2024, where we are today. But I think it's a good idea to get the focus back on blockchain, in terms of research and development to get over the performance and some of the other things, so that its application that you were saying, that it is not just government is very, very enthusiastic, so it really gets us, due. Investments will come. I mean, the winters and summers they happen to all the time. But I think I would say if somebody is doing good work in this area, especially in core research and technology development, that's a good time to invest.
So Shalin sir, what has happened in 2 years are really very, very drastic changes has happened over here. First, the investor's mindset has now clearly demarcated between what are the blockchain startups or the blockchain ventures or what are the crypto-based ventures. So previously, blockchain and Bitcoin are synonymous when such startups or such businesses has not been created. But today, investors are demarcated between these two technologies. Blockchain startups are different and the crypto startups are different. Secondly, investors start to feel that somehow the blockchain startups has been finding more regulatory acceptance from various countries in the world rather than if you are linked with any crypto based startup. So that demarcation has again comes down into the regulations. For example, over here in our audio over here, if I just want to ask, maybe if you can raise the hands, how many of you is now presently invested into crypto along with me? So almost more than 50% over here has been invested into crypto over here. So after the huge regulations we have seen over here in our country, India also, with respect to the TDS or with respect to the reporting, and FIU has been very, very active now from last 1 year, still people are keep investing into the crypto. So that is one thing where the general people is also going up into the investing in the crypto, and the investors are still finding blockchain startups to get into. As Kiran has also said, that it is a very good time to start off now. See, one more thing which I want to add over here is when I do sit in various chairs at SOCHM or CII, what I find from the various investors and the industrialists also, this is the time to take risk. If we are not taking risk and going forward at this time, India is in such a phenomenal state. If we are not taking risk and going forward today, we might not be able at any given point of time to go forward. So taking risk, yes, investors are also keeping up to taking risk. As Shaleen has also mentioned about the winters into the Web3 and all. See, what I feel that is because for what purpose the crypto was started. Now it has been moved as a diversified asset class. Now people are comparing with gold, equity, real estate and all of those things. And in past 2 years, you see, every asset class has delivered phenomenal returns. You just name any asset class. So be it real estate, be it gold, be it equity markets over the year. In fact, due to the rising interest rates, even debt instruments have given a phenomenal return. See, getting an 8% interest in US is like, many people has not thought in their lifetime that, okay, they can get a 7 to 8% on a debt, or bond yields will soar to 5 to 6% any time in the US itself. So that has happened. Every asset class, whether it is a metal, any asset class, you name it. So that has diverted a bit of investors' perspective from an asset class on which regulation is still developing, right? So we are at the nascent stage of developing the regulations as such. So that has marked a shift. 2019 and after 2019, many things has been started being developed on a blockchain, and this things gives the utmost comfort to everyone, to every investor also, that something is now being happening on a blockchain. It's just not the only crypto thing. And if you really can make a good solution which will resolve your real life problems, then I think the investors are laying down to give you a very good fate onto them if you are really bringing out that good resolution. So
Before Pranav, you speak, I think that you made a very good point with regard to interest rates. I think about myself as well. 6% interest rates in dollars is very appealing. It causes me to be very, very careful in terms of how I'm going to invest my risk. I want to also touch upon a point that you made later on about different countries. Thank you for bringing that up. We'll speak about that later on as well. Pranav.
So I think two things have happened over the past, 2.5, 3 years. One is, I think, legitimization of emerging technologies. Emerging technologies were things which were left in a corner to emerge, and then other people will participate. AI has been there for the past 15, 20 years, many obituaries written, resurrected in the form of ChatGPT, OpenAI, etc. And rest is history, of course, we know about AI. And of course, when you look at blockchain, ETFs have been a game changer because in many ways, US is the I would say is the place, is the Mecca of, if I'm using that word, for capital markets. So if let's say this is about capitalism, fintech, etc., all of these things about capitalism, then essentially if there is, that's a validation. Now, yesterday if somebody is talking about or filing, it's not about talking, it's like a couple of companies have actually filed for a Solana ETF. It essentially signals that, there is a massive legitimization of the space already. And, there is always an inflection point, since you touched upon a point about, semi-regulated and regulated, is that there's always an inflection point that things go out of the hand of the regulators, So it's like, and I'm just giving a very weird example, like for example, if you're bringing up a child at home, there is only till a point you can control, But let's say if you over-control, they will go out of your hand. So I think this has happened that with the legitimization and the scaling of blockchain and other emerging technology, it is creating a huge space wherein regulators are forced to see that how they can facilitate rather than block. So when you look at even India also, this will hit Indian markets. Of course, there are ETFs which are being launched in Hong Kong, I'm sure, soon in Singapore, and India would not like to, be left behind in terms of losing on the revenue making opportunity. And I'm sure there'll be enough, pressure from various stakeholders there. So the point number one, legitimization of emerging technologies. The second thing is also commoditization of emerging technologies. That means that, let's say if you look at AI, people have moved on. They're looking at superior AI. They're talking about entropy reduction. They're talking about AI hallucinating. They're talking about cost of data warehouses, data centers, etc. So people have already moved on. They have assumed AI to be a part of life. Now, of course, WhatsApp, Meta got AI engine. Now they're talking about that Google is left, far behind, and Microsoft will also struggle with their massive investment. And all of this has happened over the past, 6 months or 12 months, give and take, here and there. Similarly, in blockchain also, things are moving extremely fast to an extent that there was a point at which, scalability, gas fees, they were the bone of contention, point of conversation. But now these things, people assume are hygiene. If you don't keep these things as your cornerstone of design when you have a blockchain, investors will not even touch you. It doesn't matter speculative or non-speculative reasons. So we have evolved as an industry massively. That means that if the commoditization has happened, that means that massive commercialization opportunity now is in sight. So the naysayers who have been saying that not too many use cases, fundamentally look at it this way. If the base layer blockchain was not institutional grade, the middleware was not institutional grade, the application layer just would not work. But now with all of this infrastructure and regulated components, Formedium, Liminal, etc., becoming stronger companies, stronger multi-country players, it is creating a space wherein the applications on blockchain, rightly as mine was also touching upon, abstracted away. So that nobody would care whether there is a blockchain underneath. But because of the commoditization, because of the fundamental technology being institutional grade, it will see that many more applications on a large scale will emerge. I just want to touch upon one point that briefly came in is that when it comes to emerging technology, we have only three options. Either you can build, like I'm sure, let's say Formedium, Liminal, and many others, they chose to build, or you can enable, as in, for example, as an investor, we enable, or you can become a consumer. So the point I keep on making to people is that if you're not building, if you're not enabling, in any case, you'll become a consumer. So you have to make a choice today before the emerging technology becomes an emerged technology.
Yeah, of course.
I just want to mention one thing. See, technology development or research and its application, what we are talking about regulation is around a use case or say around crypto, around currencies and all that. Technology development, and I want to make sure that we understand that AI is one area where the technologies are very pervading to the point of serious decisions being made, and that's the reason we are now talking about regulation. When it comes to blockchain core technology, I think we need to split it from regulation, because the reason technologies have had such an innovation over the last 50 years is because of the free reign it has had away from regulation. So when we are looking at blockchain, a use case may be regulatory, under regulatory, and we should do that when it comes to currency and any other thing. But there are many potential visible now and later use cases that may evolve that have nothing to do with any regulator. And I think we must keep that in mind.
You actually, that's my next question, which is, every cycle we've seen, interesting developments around blockchain. The one I always bring up is, even though we had a crypto or a blockchain winter in 2018, 2019, we saw the advent of decentralized finance, via Uniswap and different protocols that were coming out. What is that in this last couple of years? Like what has been developing and what has advanced to a point where it really excites you? I guess I'll answer my own question, at least from what I've seen it. Is tokenization of real world assets seems to be a really exciting potential use case for blockchain technology. That being said, still feels a little bit more hype than real. And I just wanted to maybe get your thoughts on what excites you in this space. Maybe it is tokenization, and maybe you have some thoughts around that. Pranav, we can start with you and go reverse.
So I think the single, when you, let's say DeFi, tokenization, or let's say fintech, I think the key word is liquidity. Because I remember I was very early invested in fintech. I was investing with a bunch of friends from KKR, Chris Capital, etc., in personal capacity. And I remember that in those days, there was only, I think InMobi was valued at about $300 million valuation. So this was, I think, about 2013, 14 or whatever. There was, and essentially fintech was experiencing incumbency effects. So basically the banks were extremely tall and they were like, we don't need this, you know, we don't want to work with you. So fintechs were failing left, right, center. And fundamentally it is because of capital. One is capital to build. Second is rails to bridge liquidity so that you can solve for the efficiency problems. The role of the technology is to make things cheaper, better, faster, either of them or all of them or in some combination, permutation combination. And what we have seen here in DeFi is that massive amount of liquidity came in. Of course, people made money is one aspect of it, but it also created global rails for money to be transmitted, leveraged, insurance, etc. Phenomenal experimentation, you know, as the traditional bankers may put it. But some of these have become very serious players. Like if you look at Aave as a protocol, even the big boys of the capital markets also embraced it to do certain transactions. Regulations put certain guardrails to ensure that you can't do these things on scale. But let's say, for example, with ETFs coming in, there is a possibility. Now the thing is, the interesting thing about human pursuit is that now that ETFs have come, bankers want to make money. So rather than selling more ETFs, they will also see that can they make more complex products, structured products? Can they have things like leverage which could be coming in? Can they build rails with, let's say, Bitcoin ETF, let's say bridging with, let's say, traditional stock markets? Can there be a tokenized, let's say, stock market index bundled with ETF? All sorts of, such things will come over a span of time. So the point I'm making is that the real point of consideration here is liquidity. Is the liquidity, now the question to ask is that, is tokenization valuable? Of course it is valuable because it reduces your private placement cost. Very simple, So let's say the private placement cost, can range anywhere between, I don't know, 3 to 8%, depends upon what kind of complex transaction you're doing. It can bring it to, let's say, 50, 60 basis points. That's phenomenal. So it just completely makes sense that, tokenization will work. So logically it makes sense. The second point is, the second question that you're asking is that when will it work? When will the liquidity come? So one, ETFs have come, many more ETFs are coming, not only in US and other places, so liquidity rails are getting set up. A lot more incentive for other traditional players, Morgan Stanley's, Goldman's, etc., to step in to monetize this as a massive opportunity over a span of time. Lot more institutions are participating right now. So at some point what happens is that early movers are always maybe 5% of the humanity. So when that early movers sort of see early success and some of the late movers start joining the party, the rest of the people will be tagged along in any case. And so my sense is that the liquidity problem of tokenization should be solved in the next probably, let's say it will take 3 to 4 years. But once it is solved, it will be irreversible. That means that this will be the new hygiene wherein, let's say, the world will operate, wherein the private placements will be thing of the past, and tokenization will be the norm that will happen. And so the idea is that if you have built a great infrastructure, let's say at Formedium, Liminal, I'm just giving examples because both of you are around. I mean, of course, the industry is also doing a phenomenal job. Then you will monetize this flow. It's almost like creating a dam so that when the liquidity sort of comes in, you just monetize with your toll gates and your rails. I'm just giving one real example to beyond this philosophical and logical framework kind of a response, is that I have spoken with people within the royal family of, let's say, Abu Dhabi. They have a huge real estate portfolio. Now picture this, the 2008 crisis in UAE was brutal. For all of you who know that they were straddled with multiple cranes, unfinished buildings, etc. They know these things and they're hard lessons. They also want to create liquidity around the real estate portfolio that they have. Most of the sovereign wealth funds which are sitting there, they're all sitting on huge balance sheet of real estate assets. So how do they sort of offload these? They can't offload the ownership, but they can offload the economic rights of these. They can fractionalize them and distribute them globally. And they can also find a way to recall, buy, sell, etc. So they are very keen to do this, just waiting for the liquidity to come in. This is one real conversation I've been having for the past 1.5 years, and I've been sort of pushing them on the side that we can't create liquidity. Liquidity will originate from the West. It will come from US. And once it comes from US, then you have to ride the liquidity. It's like riding a wave there.
a very valid point has been raised by you, liquidity. So liquidity is the key essence for any asset class to thrive, because until and until people come and join the forces, provide the liquidity for an asset class to survive, it is very difficult for any asset class to survive. So apart from liquidity also, one key point where I actually want that every one of you should think about is why a technology will ever succeed. There should be a real life problem for which that technology is being providing you a solution. That is the main essence for a technology to succeed. Just I'll take you past in 1990s where the computers were born, or after that the internet has came. So what the problem we faced that internet has solved? Communication. Communication was the real life problem. I am sitting in Jaipur. If I want to communicate someone from Mumbai overseas, I need to send in post to them. It will delivered after 3 days. Something will back to me over phone. Many things were not clear. Internet has resolved that quickly. Send an email. 5 minutes, you'll get a reply back. You have the approval. Start your work. So internet has penetrated in a straight line to the mainstream audiences because it has been solving a real life problem of communication. Now, what blockchain is solving? So now, the key real life problem is one, trust, second, transparency. From the subprime crisis, we have seen in the entire world that people have lost trust into many central institutions, their own governments. So what blockchain through its distributed ledger technology, what we call it as a DLT, has been solving the real life problem of trust and transparency. So many times when we talk to investors, we often tell two things. Do you really feel that trust and transparency today is a bigger problem which we should address? If you agree, then this technology, yes, has to succeed. As Shaleen sir has also told about, see, there are many experiments happen, and that will always happen in a newer technology. A DeFi has happened, then the tokenization is being on. In last 2 years, after the winter of 18-19, we have seen NFTs has boomed up, right? We have seen every damn creature in this world is being tokenized as an NFT. I didn't know that a picture can has a 1,000, 1,100 attributes also onto it. And that was being created on an NFTs, and everybody is being frenzy about it. But where are the NFTs today? DeFi is a main thing. It brings out the solution to your trust and transparency. After 2008, Lehman Brothers, people has lost confidence in the banking system. What DeFi is solving? The problem of your trust for your money. So your money is in your hand. You can lend out, you can borrow transparently on a blockchain. That trust and transparency in being so. So what I also feel, these two things, trust and transparency, the solutions being built around it, solving these two problems, will always see the light of the day and will always be frenzy of the investors. Experiments will happen, and we have to go to solve the problem of trust and transparency.
Very good point. We should always remember why blockchain. Let's go back to basics, right? It's about trust. There's a lack of trust in the world, and blockchain provides transparency, security, and immutability, which creates trust. That's the whole point of blockchain. And that's why, in a world where it feels like there is an increasing lack of trust, this is in and of itself perhaps the biggest bull case for blockchain and the reason we need it, among other things. Efficiencies and reduction of costs and all the other extra benefits that we get from it. I'm going to, we are kind of in our last 5 minutes. I'm going to push for a few extra minutes before the Oscar music comes on and kicks us off. But are there any countries you think are leading in this space? And more importantly, perhaps, are there countries that you think are lagging? You mentioned that if you don't get on the bandwagon now, you could maybe never get on it because things are moving so fast now. Kiran, I'll start with you.
I think, my thoughts when it comes to computer and technology are always global. I think democracies if I take a very high view, need to embrace blockchain completely. You know, if United States, for example, develops the technology and India becomes a big crucible of use cases beyond what is there, I think everybody will be a winner. But smaller countries definitely need to do that. I want to just go back to, you know, this air here is full of finance, fund administration and all that. So our thoughts go back there. So I want to just get the computer science torch up here. And token as a mechanism has existed in the algorithms and techniques for as long as before you were all born. Okay. Now, tokens have a advantage and there are some disadvantages. And because we have only 5 minutes, I think, you know, in some cases tokens work, some cases tokens are not the best way. So all I'm saying about that is that if it works, perfectly fine. But I can guarantee you when blockchain takes center stage somewhere down the line, somebody will throw up another mechanism which may not have token, and we need to be inclusive about that. Coming back to your original question, I think this is one area, if I see the recipe of blockchain, it's like, you know, if I go back to the very basic, data that is replicated and distributed, because it's a democracy, different people have, you know, access or control to it, and then we have the tadka of tokens on top of it. And then we are looking for all the use cases. So let's build this technology and let's use it, extend it beyond, like what you were saying, Tarun, about Niti Aayog and all that. I think next 10 years we will see significant, possibly even beyond AI, because AI is very specific. Well, blockchain can apply a whole bunch of things. So I'm very optimistic about that.
Well, we've hit our time limit. I want to thank our excellent panelists today. Thank you very much for this wonderful discussion.
Thank you, panelists, for shedding light on blockchain's investor landscape. It was good to know about the evolution of the technology. How do you structure and build blockchain organization, navigate regulation, why invest in it, and why now? It is also very encouraging to hear about blockchain coming out of shadows of its child, Bitcoin, and investors' bullish point of view on blockchain companies. Thank you so much, everyone. And now I would request Charlene Madan to felicitate all our speakers. आप आगे चलो। Thank you so much. I'm calling our next panel, who are going to enlighten us on the use of blockchain applications in financial services. Can I please have these speakers on stage: Rakesh Kumar, CTO Formidium; Maheen Gupta, founder and CEO Liminal; Naveen Sharma, CEO and founder IOPS; Ashok Rathod, founder mixcoders.com.
Hello, good morning, everyone. I think you all are listening a lot of talks here today. So I thought, like, why don't we start with something different before we start going into the discussion today. So I think a lot of talks happen. So I have just one question. How many of you think cryptocurrency is blockchain? Please raise your hand. Okay, I see a few hands up. Okay, and I think, so just to start with, correct, cryptocurrency is not a blockchain. Blockchain is a technology and cryptocurrency is one of the use case of that. And that's the segue to our topic here today. So we are going to talk about more on use of blockchain application in the world of financial services. So before I get started, I would like to start with a quick introduction of myself, and then I will pass it to the panelist. So everybody, as all of you know, I am the Rakesh Kumar, Chief Technology Officer at Formedium. I have been like using blockchain technologies from I think 2016-17, and I love this technology because of the underlining concept, and we have like done several projects on that internally as a, like use cases when we started learning as a group of friends, and that's where like I build my interest into blockchain technology, and I started my journey from there. So, Payne, you want to go ahead?
I'm Maheen Gupta. I'm founder of Liminal. We build custody and wallet infrastructure for the eastern part of the world.
Thank you. Naveen?
Hello, my name is Dr. Naveen, and I'm founder director of IOPS, a cybersecurity, blockchain-based cybersecurity system, and co-wisdom.ai, a combination of artificial intelligence and blockchain. Though my journey started in tech industry almost 28 years back, but my introduction to the blockchain was almost 8 years back when we designed, developed, and maintained the largest Bitcoin mining data center of the world, funded by SoftBank. And then we developed some crypto ATM machines that are popular in Europe. We developed multiple blockchain solutions in our US company. And co-wisdom is something when we started, we're having a data center in Rajasthan that is the one and only privately owned data center of the state of Rajasthan. And it was a coincidence we developed something for our own protection, and come up with an idea where we started sharing the learning of firewalls with the other peers, and finally it come up with the blockchain. So that's how the co-wisdom started. Thank you.
Thank you, Naveen. Ashok?
Yeah, hello everyone. My name is Ashok, and I'm Director and CEO of mixcoders INC, and we develop blockchain applications in different industries. So basically first, when we get the chance to develop a cryptocurrency exchange in year 2014, actually I didn't know at that time what the blockchain and how it works. So I gained the knowledge about how to set up the node and how to develop the payment gateway, our own payment gateway, and it's keep very interesting. Like I keep learning, I deep dive into it, and I get all my fellow members to get understand the blockchain is a technology, and after that we never look back. We keep developing custom smart contract and different STO, ICO like platform, exchanges, and many other financial applications where we support fiat and crypto, AML and KYC and different technologies integrated. And right now we are building some real world asset tokenization for very big companies in Texas, United States, as well as in some in Europe. They have a different use cases specific to the real estate tokenization, where one would like to have a real-time trading for a real estate tokenization. So you can sell your token anytime, and one is for the crowdfunding for the real estate tokenization. So this is like from year 2014 to till date, we are building blockchain projects, centralized and decentralized applications. This is a thank you.
Thank you, Ashok. I think that's great introduction from all our panelists. So as you all know, like, and we were just hearing a lot about like where blockchain applications are being used. So blockchain has transformed a lot of industries, and definitely it plays a very prominent and significant role in the world of financial sector, correct? So the keywords which we are hearing in the previous sessions, like transparency, trust, efficiency, security, reduced cost, these are the building blocks of any financial applications. These basically, any time when you deal with financial world, you are talking about these things. You will only interact with finance if you have trust, transparency, and all those things. And blockchain technology is bringing that. So with this session, I would pose these questions to all our panelists that you can give your thought, like, what are some of the significant use cases of blockchain in our financial services or financial landscape?
So, as Pranav bhai mentioned during the panel talk, if you are building an application, then it has to be better, cheaper, faster, correct? So, if there is any kind of value transfer, then there are three cost components to it. One is the actual transfer, the second piece is the settlement, and the third piece is audit. You take any type of value transfer, whether it is your bank transfer, whether it is your property transaction, whether it is your equity transaction, these are the three cost components. Whatever existing traditional technologies we have, there are these three cost components, and most of them are very, very expensive and sometimes done by different parties. Not because that is good, just because it is the way it is. When you start using blockchain or any type of digital assets on top of blockchain, it is always going to be more efficient, at least 66% compared to these other traditional ecosystems. Because in blockchain, when you do a transaction, that transaction itself is a transfer, that transaction itself is a settlement, and then the transaction itself is an audit. Agreed. So whatever application you build on top of this, considering this phenomena, you would always be able to provide better services. And that's why we believe genuinely finance, fintech is a money, and also including money. That is a very low hanging fruit for these ecosystem. Because we are as an industry, we are as a technology, we are as an ecosystem, at least 66% better than whatever you have right now. So you will see banks so people sometimes say that digital assets or cryptocurrencies will replace banks or will replace fiat currencies. No, we are not going to replace them. We are going to make them at least 66% better. So we will build the new banking infrastructure. We are building the new banking infrastructure. We are building the new investment infrastructure. Every damn thing that you are talking about, finance, fintech, or money, we will make them better. So from my side, anything that is related to finance, the application you can think of, you should build on top of blockchain. You always have an edge compared to whatever existing technology.
Completely agree with you, Mahin. So I think you touched very important thing, saying that we are not going to replace what we have today, correct? We are going to make it better, correct? And so even in the previous talks we were hearing, correct? Technology is going to enable things to make it better. And then the blockchain technology, which we have talking about here, is going to make financial transaction more better because of the transparency, trust, and efficiency and reduce cost. So that was a great use case. I'll pass on to other panelists.
So, agree with Mahin, but Rakesh, imagine a world where financial transaction executes with unparalleled speed, security, and transparency. A world where ledger is distributed between several thousand or thousands of servers worldwide. Data is written there, and some transaction and any financial transaction that happens, they do not need a centralized authority. It's a peer-to-peer transaction. I think that is the beauty of blockchain, and it's a revolutionary technology, I believe. Some of the use cases already we are seeing, like a lot of organizations, even I think Onyx using a specific type of called Link, L-I-I-N-K. They are trying to use collective intelligence. So you can share the data. So coming back, like security, transparency, immutability, or audit trail, these things are the core part of blockchain. But like the innovations are happening. So even they're having a product, I'm missing the name, but you can verify the any bank account like with that system, because it's a crowdsourcing intelligence. So that is an example. So I'm agree with Mahin, like everything, it is a technology, and always when you say distributed ledger technology, so it's a distributed ledger, and if ledger is in your system, I think you are using ledger in all your financial products or those things. That is going to be somehow sooner or later replaced by DLT. MasterCard, I think already we know they started doing this. Coming to the crypto, like they developed a system where you can pay by your crypto on all the merchants they accepting the MasterCards. Other interesting thing I have seen is the investment part. We already know like this token, whenever we are developing some new systems, especially the blockchain or token, how easy investment is nowadays. Though different countries have different laws and compliances, but that is also very easy, like a small user, even a student can invest in any real estate tokenized is just an example. Okay, someone is building in UAE, in Dubai, a builder is building a very huge real estate building, and you having maybe you just want to invest $5,000. You having an ownership in that building. So a lot of opportunities are there, but I think we need to not to find out where we can use blockchain. The question is where we cannot use the blockchain.
Mm-hmm. Yep.
Thank you.
Yeah, I think what you touched on, like MasterCard and all, correct? I was talking to like PayPal in one of the conference, and they are investing a lot, and they have already started a lot of transaction using stable coins and all. So that's a real world which we have started seeing, that PayPal, like I think most of you know like PayPal, and now since PayPal embracing this technology themselves, so that's the segue to how these things will come to the real consumer and they will start adopting this thing. Ashok, to you.
Yes, you are right, Rakesh Kumar. I think apart from PayPal, many other banking sector, they have adopted the cryptocurrency. One of the example you can say is CBDC, centralized bank cryptocurrency. Actually, I installed the app from HDFC Bank, with they have also introduced something where we can have a wallet address. So this is one of the use case of the blockchain in fintech. Apart from that, I would like to mention here about DKYC. First I heard from I think Polkadot, who launched the decentralized KYC, where you just need to KYC once and you can apply it to any DeFi or wherever the regulation is required. So you will have a public key which will be work as your KYC. So all the documents can be verified and give you the identity that you are verified. So this is also one more example of the blockchain in fintech. Apart from that, I would like to mention about the cost for the infrastructure. So many, some of the platform who launch, and they are helping fintech like banks and financial institute and financial service providers to minimize their infrastructure cost, whatever they pay to AWS or Google Cloud or Microsoft Azure or whatever the cloud infrastructure they are using. They reduce the cost if they will implement the blockchain in their ecosystem. Many other thing what I really develop and see in real life about DeFi, that means the decentralized finance, where used to run the like arbitrage smart contract to leverage the price between the different cryptocurrencies, as well as the I think farm and also the you can get the loan, as well as you can borrow the money
Yeah, so
without any.
I agree. Like there's a lot of like DeFi use cases which are there. So I think you touched on like, so we definitely talk about like digital payment, which is like most common and most of the people know about that. And you touched on the point called AML KYC. So I know like many, you guys are working a lot on that. So you want to highlight something on the AML KYC use case on the financial sector?
Again, people might not know this, but sometime back in 2016-17, SBI and few banks have started an initiative known as Bank Chain. And the idea around that was a centralized KYC, reusable KYC, built on top of blockchain. I think that was a right idea. It should be done. It can be done with centralized systems also, but why it should be done on blockchain? The thing is that I'm not saying that blockchain would enable something unrealistically crazy at application or value layer, okay? But by introducing blockchain, what you are getting is little less fraud or little less probability of fraud. So if you can still implement the reusable KYC on a centralized system. Let's say, for an example, the core banking now has a module which is like a single KYC system, and then like in Singapore you have something known as SingPass. Aadhaar is basically something similar to that. So the systems exist, but then if there is a chance of fraud, then there is a lot of effort that needs to go to audit that, to identify the vulnerability points, to solve those problems. I think KYC is absolutely a very good use case. Having said that, please remember that whatever you put on blockchain is available for public. It is very good thing because your verification cost goes down. Like literally, for an example, I'll give you an example of, let's say, your certificates. Your current certificates, either driving certificates or college certificates, or even mining or whatever certificates which are like very important, are given in a paper. So the issuance cost is lower, but the verification cost is very, very high. You have to have people, someone calling someone else and go through the whole manual process to find out whether that particular issue certificate is legit or not. But once you put it on a blockchain, because it is public, your verification costs are negligible, and that is an enabler. But having said that, you really need to design it right. Again, I'm coming from tech background, so I'm telling it's that 90% of those solutions that exist on the current blockchain right now are not suited or not suitable at this stage for a data like KYC or for a data like healthcare. Having said that, technology is moving so fast in this space. I don't think so. Even I am, who is like 100% in this ecosystem, is able to keep it up with this. So yes, it's a good use case, but again, the tech has to be sound and you have to think through it.
Yeah, no, that's great. And I like your analogy about the certificate. And that was the use case, like when I started my journey, that was the use case we were looking into, that won't it be great that if universities provide the degree to all the students on the blockchain? So they directly so right now what happens if you join a company, your HR will send to some third party vendor asking, can you verify all of those things, correct? And they charge hefty for it, and then it takes weeks to get all those things. And then if it is on the blockchain, you can instantly verify that whether you have passed out from MIT or you have passed out from IIT or Central University, wherever it is. So these are real great use cases here. I want to touch base on some other use cases, and then we can talk about this. Specifically talking about use cases related to decentralized finance, correct? DeFi. You have heard about a lot of use cases like protocols of Uniswap, lending, and all those things. So I want to just open up it. If you want to talk about lending protocols or like Uniswap, correct, then that will be good for the audience.
So I would like to talk about DeFi protocols because we have built a few dApps like Uniswap. So this is something really you will by knowing it, that you can lend your money or you can put the liquidity, and people can use this liquidity to trade, converting one digital asset, digital currency, crypto to another, and you can earn the fees out of that. So you can make money by putting your money as a liquidity. So this is the very good idea where you don't need to just connect with your decentralized wallet. You put the liquidity in the pool, and whenever you want your money back, you can get it back. So this is something. And another thing, when you exchange through the smart contract, you don't need to wait for a second to convert and get your digital currency back to your wallet. So for example, let's say you are converting from Ethereum to Matic, Polygon Matic, okay? So you just click Ethereum 1 and whatever the Matic you will get. You sign the transaction, you will feel like you are signing through MetaMask, and once the transaction is confirmed, you can see that transaction on the block explorer. Once it is confirmed, you will get the exchange amount in your wallet. So there is nothing like you need to go to the bank, and you will see like how easy, how fast, and how secure it is happening. So this is something DeFi and DAO kept in my eyes. Like wherever I see some opportunity to work on similar kind of platform, I I go, and sometimes where I find the opportunity to work on some complicated smart contract, I always go to there is the way we can learn the smart contract and how the transaction is happening through the block explorer, etherscan.io or something. So you can learn more than just how the process is going in deeply.
Thanks. So, you want to add anything on that?
I just want to double click on this. I think DeFi is fascinating. So I'm personally not big fan of financial engineering, but just looking at as a viewer and just an observer as a techie, it's phenomenal to see the structured products that banking industry or the financial wizards they used to create in the back room, which 99% people would not even understand, and still being sold. And the repercussions are same. If there is a benefit, then people get the benefit. If something happens, then they lose money. The repercussions are same on the traditional structured products and the DeFi structured product also. One misconception people has that when you do DeFi, then you do not have a counterparty risk. I think that is wrong. Once you put your money in a smart contract, it's not your money. Now it is controlled by smart contract. So you at least have a counterparty risk to the smart contract risk. But having said that, just looking at DeFi playing out real time with the composability. So what is composability? You have built one application and then someone takes that application and builds something on top of it, okay? That is composability. So you don't have to rebuild again and again the similar layers. So for an example, if bank provides me a bank account, then I can use an issue card on top of that bank account. That is composability. But DeFi composability is next level. Because it is open source, because it is permissionless, because it is accessible to every person who can think and learn JavaScript, that composability has gone above and beyond. So now, what we are seeing is the structured product that sometimes for a bank to release a structured product, it takes a year. And still, only few bank employees just understand about it, the risk about it, the nuances about it. You are seeing that whole thesis playing out in live. Money is locked in there. That is a live bounty. I'm not saying that is good thing or bad thing. I'm just saying that it accelerates everything. And whatever accelerates always innovates. So I'm big fan of DeFi in that sense, because the financial instruments, the speed at which financial instruments used to get created in the previous era, that is gone now. Now a developer who can understand JavaScript can create a bad financial instrument, but that bad financial instrument give learning to every other coder again, and they will build a better financial instrument. So down the line, 3-5 years, you will always have a much better system compared to what you have existing one.
Yeah, I agree. And that's the great thing about open source and blockchain technology. If you are writing a smart contract, everybody sees what you have written. So they can find any kind of loopholes and then they can point those out and the next person can build. So the thing is, as we talk about one of the key parameter, immutability, correct? That means once you deploy something, you can't change it. That you need to rewrite and deploy it again, correct? So in the financial sector, correct, the use of a smart contract, correct, is definitely, DeFi is one of the common decentralization related to various things. We are also like a lot of things related to agreements, correct? Nowadays, like say letter of credit, smart contract is a very great use case of, you can have your letter of credit using a smart contract and see how efficient it will be. I don't know right now how much time it takes, but it takes in like months to get your letter of credit validated through bank. And these are other use cases which are like very prominent and can shape the way financial industry is changing. Anything you want to add on these lines, on anything on a smart contract? I know like we talked a lot about like asset tokenization, and we have a session later on the asset tokenization. So I would not like to touch that right now, keeping in mind we have only 3 minutes left. So definitely anything else you want to add on this, please go ahead.
So I would just like to say, when coming on the blockchain, especially in the finance, blockchain is another technology. Like when at the early stage, we are using databases. It can be Oracle, or it can be MySQL, or it can be MongoDB. Now there are different blockchains, but selecting a right blockchain is very important. And I say that these are the only tools, but our innovation is the most important part of it. Especially I have seen like public and private blockchain. I will suggest if some like Hyperledger Fabric consortium should be there between the financial organizations, so that it is controlled and shared things can happen between the organizations. At the same time, I will also like to add the concerns. Like still, blockchain is it's evolving phase. So we have already seen few things, like especially the denial of service attacks that happens too much, and we have already seen the downfall and growth of Solana because of that. Earlier there was another good product that was sharing the Wi-Fi bandwidth. I forget the name, but it was a very good product. But because of the denial of service attack, this system was down for almost 3 days, and it was almost from $45 to $3 the value was of the token. So we need to also consider about those things. Most of the time we skip those discussions. So these challenges should also be discussed in detail in some separate.
Sure. Yeah, go ahead.
Very quickly, I just want to double click on the immutability part that you are saying, and it's very important. Sometimes people think that smart contracts are some kind of a magic, and they will do something which brings in immutability. I disagree with that. The concept is still same. Garbage in, garbage out. In the traditional finance also, if it's a bad product, it will generate bad outcome. In smart contract also, if it is a bad smart contract, it will generate bad outcomes. Having said that, the advantage of smart contract is actually the immutability that it brings is without any favor, without any emotion. I want to give one example here. When FTX started crashing, a lot of these lending companies started blowing. A lot of people who has taken loans from, let's say, BlockFi or other companies, they started defaulting on their loan to BlockFi or something else. But these same people has taken loans from Compound. They have taken loans from Aave, and they had to repay that.
Yep.
Because there is no one to call there. There is no one to say that, okay, my margin call is there, but I will pay the money tomorrow. Please hold that. In smart contract, it's like the way the way Bhagavad Gita says, Matsya Nyaya. There is nothing good or bad. Whatever it is. So in smart contract, this is the good part, that if the smart contract is actually good, then it would not be influenced by favor or a call or threat or by government or by some influential people. It will get executed the way it is supposed to be. So the level playing field becomes fair to everyone. And I think that is a fascinating thing to achieve as an industry.
Yeah, I completely agree. Smart contract is nothing but a piece of programming code. So if you write, if this is this, then do this. So that's what it understands. So there is no emotions to it. I agree. There is no like favor from any side. So that's how the smart contract is. And that's where the reason like why when we are talking about the different use cases in financial sector, correct? Because right now we might feel that there is some kind of favorism, some kind of trust which is not there. And this technology is bringing that, and then the adoption of everybody were talking here, correct? Next 5 to 10 years, you will see this will become the main streamline in the financial sector. So I know like I'm running out of time, so I'm going to just close this up. Thank you everyone, and thank you all the audience for such a nice patiently listening us on the use case of blockchain in financial technology. Thank you.
Thanks everyone.
Thank you, panelists, for your comprehensive overview of blockchain's application in financial services. Now, the bigger question is, where can't we use blockchain? It can be used everywhere, and we can only make it better, faster, and efficient across all sectors. Now, I would request Rakesh Kumar to felicitate all our speakers. Thank you once again. Now is the time to grab a coffee or tea and relax, and see you back here after 15 minutes. Thank you. Welcome back, everybody, after the break. Now, I would like to call upon our next speakers, Hitendra Singh Chauhan, CTO Virtual Heights, Manhar Garigrat, Country Head Liminal, Rakesh Kumar, CTO Formedium, and Mandhar Matre, CRO Formedium. Can we please have you on stage? And for others, I would request, please be seated.
Hello. Good afternoon, everyone. I think you have a good tea break. So I think we'll get started with our new panel discussion, specifically on real-world asset tokenization. I think in the entire session, whatever sessions we had, we have touched this real-world asset tokenization by each and every panelist or the speaker here. So this is definitely a very fascinating topic to discuss in more detail, and that's the reason we have this session. So before we get started with the session, I would like everybody to introduce themselves. I have already made my introduction last time, so I will skip it. I'll move it to you, and then.
Yeah. Hello everyone. This is Hitendra Singh Chauhan, CTO and Director, Web30 India. It's a unit of Virtual IT Services Private Limited. We are working from last 13 years. From 2016, we have been in blockchain. We have worked as a technical partner with all our products, and whenever we need any IT services, we are there.
Thank you.
Hello, everyone. My name is Manhar Garegrat. I am the India CEO for Liminal. I think it's fairly clear what we do. We are a wallet and a custody company. I think one of the most important things that we are now working on, and which is a flavor of the season, is real-world asset tokenization. So therefore, it's an absolute pleasure to be on this panel here today. Thank you.
Thanks, Manhar.
Thanks, Manar. I'm Mandar Matre. I'm the CRO for Formedium, and it's absolute pleasure to be here to talk about RWS.
Thanks, Mandar. So I think keeping in mind, correct, like very important topic, and there are audience like of all scale here. I think the first question I would like to ask to the panel, and I think it will be great to start with that so that everybody understands what is the foundation. So what does actually tokenization means? If you can start with that, correct, like what tokenization means, and then we can take that as a foundation to elaborate more on that.
Sure. So, see, one thing is very clear, and I think we've had so many fantastic speakers before us come and discuss this whole piece. I think Sir from Mahindra, he mentioned about tokens, right? Tokens have been in existence on technology even before all of us, many of us came into the world. So, tokenization primarily is representing something that's part of the real world, something that has value as an asset, merely representing this as a token on the blockchain. What this does is basically, it now makes this asset that you had, this asset could be a house, it could be, in fact, the interesting thing is, not a lot of us talk about this, but money or cash, okay, if you look at it, it's part of the asset side of the P&L. that has been tokenized so effectively in the form of stable coins. So what is stable coin? It's also at the end of the day a real world asset, which is dollars, treasury bills, all of those things which were locked up in one place, secured, custodied by somebody. And then in place of that, a digital representation was created for transmission on the blockchain. Now this US dollar, which was possibly only transacted by certain people within a ecosystem, is now become a globally transactable currency, and it can be transacted peer to peer between anybody at any point of the world across the globe, right? So that is really tokenization. It is taking an asset, a real world asset, and then representing it in the form of a token on the blockchain to bring in scalability, efficiency, cost effectiveness, etc.
Yeah, great. Yeah, it's a simple. It's just a process by which you actually take a real world assets and make a digital representation of that in the blockchain, correct? That's the simple, and it has a value. So once something has a value, then there are next steps which happens, correct? So let's talk about like some of the key benefits or opportunity in the space of tokenizations, correct? So we can talk about things. So one of the key thing I think we were talking in the previous session is liquidity. So I think maybe we want to start with like defining like what liquidity is in the form of tokenization, so that the audience is aware of our liquidity, and then we can talk about like how it helps things.
Right. So, in a very crude way, to say liquidity is essentially presence.
Yeah.
In a very crude way, to essentially say that liquidity is presence of buyers and sellers in the market. And what you hope to do is have many of those buyers and sellers in the market, so that your assets are freely tradable. There's no point of putting a token on anything if there are no buyers and sellers and there is no underlying liquidity within those markets. Now, that liquidity is following its absolute natural curve, right? That liquidity essentially has started with some of the far more liquid corresponding real assets, and it's now moving slightly towards a bit more of illiquid asset. While it sounds very simple that you just need buyers and seller, but you need a whole bunch of an ecosystem to take care of that liquidity, right? So you need, if it is a regulated asset, you need a regulator who is on board with you. You need press talking about it on regular basis. You need a lot of content around it. You need a whole bunch of infrastructure players which is supporting that liquidity. And then at the end of the day, you need a trust element involved into that liquidity, right? So when all of those things come together, they work beautifully, and then it becomes a machine which just keeps on growing on itself.
Okay, you want to add something?
Yeah. So as a CTO, I just seen the code, okay? Code, technology, ecosystem, and which are the things that we need to add to complete the use case, right? So basically what happening in the blockchain, there are two protocols. One is non-fungible token and second is fungible token. ERC20 and ERC721, right? So all ecosystem are created in only these two protocols, and both are the numbers. And now with the help of these two numbers, we are creating a whole ecosystem. We are assigning the liquidity. We are providing those liquidity in the smart contract to achieve our use case. So basically, to give the value to any token, we should have the liquidity in terms of either money or either asset. So in real world asset, it should be back linked with any real asset, any fiat currency or any physical currency, any commodity or anything that can be under the regulation. So if we do that, then our liquidity or our tokenization in RWA will work.
Thanks. So I think we are talking about liquidity, correct? And when you think about like one of the other benefits which we hear about is fractionalization. So like I would like to bring that point that what do you mean by fractionalization and how this fractionalization is going to help adoption of the technology like tokenization to the real mass, correct? So what is fractionalization mean in the real world asset?
Sure. So See, the interesting thing is, if you think about it, um, if there are assets, everyone's trying to basically work hard. All of us are working hard in our own lives to try to build assets so that we can, generate wealth, and there are a lot of goals that we have, we can achieve them. So in this journey that we go on, we try and acquire as many assets as possible. Now, with a lot of the assets, I'll give you a simple example. Many of us would be very well versed with stock markets. We would be trading equities, buying stocks. It's a very easy thing for us to say, today I bought X stock, Y stock. But if you look at the larger number of masses, okay, and if you look at the real numbers, only a fraction of users are actually on the stock markets today. People invest in IPOs. IPOs are a big thing. It's a fairly simple an interesting thing to say, that here's a company that seems to have promising value. They're trying to issue shares. They're trying to raise capital. I would want to be a part of this company. I would want to be a shareholder in this company. But like Mandar was saying, you have to have so many infrastructure pieces around it. You have to have so much around it. By creating these pieces, inadvertently, one of the outcomes is that you end up creating barriers to entry. So what are the barriers to entry for equity? I need to have a demat account. I need to have, I need to pay AMC fees. I need to do X, Y, and Z. If I want to apply for an IPO, I need to block 15,000 rupees at minimum from my bank account. Now, all of these are probably easy things for us sitting here in this room. But if you extrapolate this across, the broader set of masses, 15,000 रुपया आप उनका block कर दोगे 2-3 दिन के लिए, that's probably, a large part of his income. Getting stuck. So where is this person going to now invest? So that's one of the big promises that we feel blockchain and crypto will actually bring to the fore, and that's where fractionalization comes in. Okay, now a MRF stock today, or I don't know what is the current price, but it's probably in a couple of thousands of rupees. Now many of us will not be able to afford that one stock. But if I were to break it down into smaller fractions of ownership, and if I were then able to reduce the barrier to entry for an average common man to now invest easily into this asset class, and achieve his goals, whatever his goals are, I think that's the problem that we're trying to solve, and that's where fractionalization comes in, reduces the barrier to entry.
Yeah, I think that's great. I can give you another example. I think just think about a big, huge building. Maybe I'm from Chicago, so everybody know Wills Tower, correct? And thinks about it is maybe like $100 million. And I really want to invest into that. I don't have $100 million to invest there, correct? But if you can do the fractionalization, let's say you take that property and tokenize it. And then you can buy, let's say, $100 million tokens you have created. And now I can invest $10,000 by purchasing 10,000 tokens out of it. That's the way, so fractionalization is giving you access to something which you are not able to have access as of today in the traditional world, correct? So that's one other use case, which is benefits of real world asset tokenization. So Mandar, you want to add something?
Very quickly, right? So what we believe is that liquidity will follow. I mean, we've already seen the latent liquidity which is there in the system. BlackRock launched its ETF, I think somewhere around January. It's already the largest crypto ETF in the world with around $23-24 billion of AUM, right? So within a short span of less than 6 months, it's gone to that kind of level. Where we see some of the challenges and where we see a lot of acceleration which needs to happen is in terms of the back-end infrastructure around it. Taking same example of Willstar, which if you need to kind of fractionalize, then somebody needs to figure out the whole accounting behind it. Somebody needs to ensure that all leases are taken care of, the expiration is taken care of, all of those things behind it, right? And that's where we also believe as an organization there is a massive amount of opportunity. These are not your traditional asset managers, so to say, but these are the kind of opportunities which are built on similar type of frameworks and similar type of the infrastructure which we provide. While RWAs and some of the non-financial tokenization will happen, it will probably just take a little bit of time before the infrastructure catches up to them, and once the infrastructure catches up to them, what we'll see is a massive exponential growth coming within those assets.
Thanks, Sundar. Yeah, go ahead.
So
let me just clear one thing. The RWA is not any protocol or technology. Okay, it's just a use case that is assigning the current standard, the blockchain standard, to the real world asset. Because what was happened previously, you was just trading the cryptocurrency, right? And who was monitoring? No one. It depend on the exchanges. Okay, if someone come just sell all their tokens, then the money will be down. So now to resolve this problem, okay, to invest your money like when you are investing in the bank, you are assuring I will return 7%, 6%, yeah, 5% per year, and your bank is giving guarantee your money is not going to anywhere. So same thing is happening in RWA, but there is no bank, but there is a community who is creating the project and who is making sure whatever the investment that you are doing inside it, they are making sure they have the enough money and they have enough ecosystem who will make sure your money will be back. So is RWA is a total whole ecosystem that we discussed earlier, like a secure wallet, okay, smart contract, the ecosystem, insurance, investor, all will come in that particular ecosystem and they will give you the good profit. If you just think one example, right now you want to buy a gold, right? With the fiat currency you can buy. But now you have a too much money in the crypto. You have a 1000 USDT, right? Now you want to buy a gold. Then there are many RWA platforms. They are providing the gold bond in the crypto. So the investment is something like if the gold prices go up, your price will go up. Okay? So no one is going to trade that things. But now just think an example like you need money. You want to invest that amount in your new business. Then in that platform you can ask any investor, okay, I have my gold bond, just give me some amount and I will pay you any percentage of interest. That ecosystem will handle everything and it will give the security to investor to, okay, this ecosystem is perfect, the gold bond is belong to us, and we will make sure the person will give you the interest and they will give the money back. So RWA is totally whole ecosystem.
Thanks. Thank you. Yep. So I think we are talking about the benefits of real-world asset tokenization. Correct? We talk about liquidity. We talked about fractionalization, and now one of the other benefits, correct, which is like is kind of may become a game changer. Is correct. Like people says with the real-world asset tokenization, it will become you will have global access to it. So what do you really mean by global access of real-world asset tokenization? Correct. So I think if you can highlight that, it will really help the audience.
Very quickly, right? The underlying technology is global. And that by that definition, you should be able to invest globally when it comes to any of these RWA assets. Now, obviously, you'll see some challenges. What will happen is as people start to invest globally, some of the countries will start to get worried about their FXs, the currency flows which are there. So you will obviously, the way you saw in crypto backlash in terms of India, you'll start to see in some of the other countries. What you will also see is some of the countries massively benefit out of it, simply because they want to house the infrastructure or the building capabilities within their ecosystem, right? So given that we are at a very, very early stage, it's a call which each country will make, and you will have to be mindful of those calls as things progress, right? But fundamentally, as of today, there is nothing which stops you from investing globally in any of the RWA assets, subject to your current regulations which are there in the country.
Yeah, so I think, yeah, go ahead, sir.
So just one point there, I think, this is going to be a very interesting evolution, because real world assets are essentially, or RWA tokens, they're linked assets. At the base, they're linked and pegged to something that's actually existing in the real world. So if you take the example of a property, currently IFSC, a gift city, which is a special economic zone, which is not considered a part of mainland India. it's a territory, it's an international territory. They have a lot of investment opportunities there. They started, giving out those. So there is one project working out of that special economic zone where they've taken a complete building and they've tokenized it and they're trying to sell it to foreign investors. Okay. Now remember, this asset is, it's actually in the geographical boundary of India. But now somebody outside of India will have, the economic rights and whatever benefits out of this, in some other part of the country. Now, while the token can be transacted globally, tomorrow this asset is going to continue to remain, in its current geographical location. So that linkage is always there. It's very strong. So you will always have that aspect playing into how much global real world asset token can move. Okay, it will also be bound by the geographical laws where the real asset is located, and that will always be a constant conflict between the tech that allows you to go completely global and between the compliance that requires you to remain within certain geographical boundaries. So this is something that we have to see how this evolves and how this plays out as we move forward.
Yeah, thank you. So,
I mean, to simplify it further, right? Think of all the existing asset classes which are there, and what now you're superimposing on it is technology, right? You're using adjectives of technology, right? So, as a layman and as non-technologist, when I think of token, I think equity shares. When I think of assets, real-world assets, I think underlying company, right? When I think of regulations in those markets, I think of money flows, right? So it's, if you kind of start to simplify and have equivalent images in your traditional world, it becomes far more easier for you to rip off all of those adjectives around technology and then start thinking of how would you invest, right? The way frauds happen in the real world, there will be frauds happening in the tokenized world as well, because there will be dearth of information, right? There will be a lack of capability to evaluate what's happening there, right? So it's very important that you lay that framework down and then build on it. Now, having said that, we still are bullish about the whole tokenization because it brings the massive amount of efficiency within the system. Earlier I think someone did mention that private placements were 3 to 8%. With tokenized world, it will come down to less than 1% in terms of cost. Earlier, private placements used to take you anywhere between 6, 8, 9 months. We would start to see fund closures on a tokenized world in less than a month because it is now far more faster, efficient, right? Earlier, AML, KYCs were absolute pain in whatever. We would start to see that being really, really available on real-time basis. So you're going to see this efficiency. You're going to see this massive amount of change in the way the things are. And you can literally equate what you're going to see in next 3 to 5 years to an industrial revolution of 1700s, where the life of multiple number of people just changed within couple of decades. And that's what I would imagine would happen out of many of these technologies which are emerging in here.
Yeah, no, I completely agree on that. And that's the thing, like, I think in order for this technology to be adoptive, right? So one of the report I was looking into, and it was saying that with the current growth, which is we are seeing in the tokenization, by 2030, it will have a 16.1 trillion US dollar economy on this, correct? So that's like really like if you see 6 years down the line, we are talking about huge. If we can tap.
That sounds very conservative, right? Because if you look at the asset, it's now close to $6.5 trillion already sitting in that digital world.
Yeah.
So it's 3 times in 8 years. That's really conservative.
It's really conservative, correct? So we are looking into maybe multiple fold of this. But one of the key things, correct, in order for this real world asset tokenization to move forward, correct? I think let's discuss about like what are the challenges as of today and how we can like overcome these challenges. So one of the thing I will say, if you can talk about something, what is technological challenge we see with respect to real world asset tokenization today?
Okay. About the challenges, if we discuss, okay, The number one is the ecosystem, like the blockchains. Those should be fast. For example, if all the people come in the blockchain, then the transaction speed should be fast. The block size should be big. Number two, if we discuss about the regulatory, okay, the taxation should be defined, regulation should be defined. Number three, if we discuss about the smart contract, right? Everything is written in the smart contract. To make sure we should have a good audit companies, okay, that can make sure the written smart contract should be perfect, because smart contract, the name is smart, but it's just writing, people are writing the code there. Number four, if we discuss about the audits, there should be a good regulation where everything or every data should be audited perfectly, and for that, in the blockchain, many new companies should be there, the trusted company that can help us to make the ecosystem better.
Yeah, go ahead.
So I think a lot has to again evolve in this space, especially when it comes to tech. You pointed out, these two token standards, fungible tokens, non-fungible tokens. I think there are newer standards emerging which are specific to real-world tokenization, the ZRC 3643. And then there are, several others that will also emerge along the way. Which one will be the token standard that, the world will sort of embrace? This is again something that keeps repeating in all technological conversations, discussions. We've had USB Type C versus Type A, and Lightning. Apple wants its own Lightning cable. So until and unless you come to a global standard that everybody aligns to, it's not possible to make the most of that global liquidity. That seamlessness will not exist. So token standard for me, one, is going to be very critical, something that I would watch out for from a tech point of view. The other pieces, actually, there's a ton of non-tech challenges, but I think we can discuss those.
Yeah, so let's have a nice segue to the non-tech challenge, correct? I think one of the key things which every sessions we discussed about regulations, correct? And what is your thought on regulation and how we can work with the government, like different local bodies, to help building the regulations around blockchain technology?
Okay, so especially if we are talking about the RWA, right? That is basically linked with the real assets. Okay, so there should be some law or the approval from the government. Whatever the platform is approved, if the platform is approved, if the community is approved by the government, then those legal entities should be in the compliance of government. So all the RW tokens should work perfectly and people can trust on it. And number two is the education. In the education part, we need to create more seminars, we need to create more conference to aware our people to discuss about what is blockchain, why RWA, what is different between RWA and the general exchanges. So these are from my side.
Now, you want to add anything on regulations? Yep.
I mean, look, few fundamental points in here, right? One is wherever you have regulation in any industry, that industry normally goes through a phase of slower growth till the regulators catch up. So my 2 cents is let's not encourage regulators to come in this industry till it is of a meaningful size. Right? The second aspect is if you start to think of, let's say, and because we are on RWA, if you start to think of an RWA as an equivalent to alternatives, whatever applies to alternatives should apply to RWA. Okay? The third bit is around talent, right? And the main reason of an event like this is how do we encourage more and more people to start thinking and reading about it. And we do really have a lot of smart people around who can very quickly catch up around on this technology, right? Ironically, I think John was telling me that India is the largest talent base when it comes to blockchain technologies, right? And yet, here we are struggling with getting really good quality talent when it comes to blockchain technologies. Right? So that talent is going to remain very, very important unless somebody figures out an AI which is able to just straight away use tech and and get this sorted, right? So I think if you are able to solve for talent, then most of the other things will fall in place. I mean, if you even talk of regulations, it is really talent, right? You need somebody to understand what is this technology capable of doing, what is it not capable of doing, how do you manage the risk around it, how do you ensure that this does not become a global catastrophe, and how do you ensure that it grows along with it, right? So it's all talent. So a lot of education will be required, a lot of evangelizing will be required within this space. And I'm glad we are doing some bit of it, at least in Jaipur.
Oh yeah, I'm very happy about that. I have like talked to various participants here, and then when we did the 2 days hackathon, I think the kind of the turnaround and the enthusiasm I saw for all the people, and they were talking about that it's like something new to Jaipur. We have never heard about this. So go ahead, man.
Yeah, so within regulations, just double clicking on that a bit. So it actually boils down to a lot of laws. There's a lot of legal ramifications to real world asset tokenization, and that has been one of the biggest barriers. So today there are at least 3 to 4 different companies who are working. The tech is maybe figured, not figured, but that's still an easier challenge. The bigger challenge is legality of all of these. So I'll give you one example. Are smart contracts legally valid? Can I basically, so in today's law, there are a lot of folks who are lawyers, who are independent think tanks, etc., who are now working with the government. What we need to do is, we've taken the current interpretations of law. They're perfect for the real world asset in its current form. But now when we try to tokenize it and let's say put it on a smart contract, first there has to be there has to be an acceptance that a smart contract is legally valid, right? It's at the end of the day a contract between two parties. Is that a contractually and legally valid, as good as maybe a contract that's being signed pen and paper? So that kind of legal challenges have to be sorted first. The validity of smart contracts is one of them. There are several others. If you look at the ownership of, let's say, an asset, real estate asset, right? How do you now fractionalize this? Let's say you have multiple owners. Do all of those owners are actually represented, with the registrar? Or is there a SPV which is created, a special purpose vehicle where which owns all of these shares, and then the owners, the buyers of these tokens are now given a place in the SPV. So how do you structure all of this? What are the legalities? What are the rights of the buyer if something goes wrong in this kind of a contract? What are the rights of the seller if something goes wrong? What if tomorrow an earthquake comes and that building is no longer there? You've invested in that. So there are a lot of these very, very complicated legal ramifications which not even regulators can really solve. They need us to go back to the way the laws were written. They need us to understand these new technologies, smart contracts, wallets, ownership, custody, how all of this works in the blockchain world, and then to map all of these together, bring our laws up to speed with these new technological developments, and then probably move forward into the regulatory discussions on how everything has to be figured, how these assets, the ecosystem can be put together.
Yeah, thanks, Manhar. I know we are running out of time. I just want to add on what you just mentioned about all the things related to regulations and all, correct? So we are right now working on tokenization platform for fund. So you are talking about SPV and all, correct? So our platform will be coming soon. We are taking care of all of these, and that's where working with the custodian, correct? Like other things, partnering with other people, and we providing valuations of the underlying assets and all those things. So that is what we are working right now, and that product will be coming soon. So I think we have run out of time. Yeah, sorry, go ahead.
So lastly, I just want to add some few points. Earlier we discussed about trust, right? Many speakers, panelists say trust, trust, trust. Blockchain is created for the trust? No, blockchain is only for the transparency and its ownership, right? Okay. Now, who is going to trust? For example, in RWA, we just discussed about, right? Someone would need to be there who can make sure the real world asset is properly owned by someone, or if something is happened, then someone will be there who can make sure your money will be back or managed perfectly. So we are trusting on the community who is creating that platform, or means the community who is launching that platform. So for example, someone is coming like me or Malha coming like we are providing one new RW token. So we need to make sure we are showing completely proof whatever you are doing the token. We have the legal things, or we have the legal proof, or we have our own regulation that will make sure your money will be safe. Like in USDC, they are in BlackRock, right? They are showing their balance there. They are showing balance sheet there. Okay, we have this liquidity on particular this token. So something need to be worked out, and we need to make sure whenever we are investing anything in the RWA token, just cross check those projects, make sure whatever they are providing, they are perfectly fine for you.
Thank you. Thank you. I think we are
Sorry,
running.
I'll just add a very small cheeky point in here. Yeah. Sorry? Yeah. The smallest cheeky point in here is that BlackRock can do that because there is a fund accountant sitting behind. And we can do all of the RWA back office because we've got crypto back office sitting behind.
Thanks, Mandar, and thank you everyone for your time today. Thank you.
Thank you, panelists, for enlightening us on asset tokenization. Liquidity is the key, and the kind of ecosystem that will help the industry. Thankfully, anyone can own a fraction of multi-million-dollar asset with global access. Now, I would request Rakesh Kumar to felicitate the speakers. Thanks again. Now, I would like to call upon our last panel for today, who are going to enlighten us on blockchain use cases across finance, HR, marketing, and operations. I would request all these speakers to be on stage. Sachin Kumar, founder, Jumbo Blockchain. Gaurav Khetarpal, founder and CEO, OneShift Technologies. Chris Meader, EVP Formedium. And John Manley, CMO Formedium.
All right, so this is essentially the last session for the day, and you've all been sitting very patiently here from the morning, listening to all the sessions. I'm actually from Jaipur, and this is the first ever blockchain conference in Jaipur. So how about we give a big round of applause to Formedium. And thank you to the Formedium team. Like, again, I've been here for pretty much all my life. We do a lot of events here on other technologies, but first, and I am hoping the first of many blockchain conferences that we'll do in Jaipur. So we'll get started. What we'll do is we'll do a quick round of introductions, maybe 30 seconds each, and then we'll kind of dive into it. So John, since you have the mic, we'll go with you first.
Okay, thank you. Hi, hi everybody. I'm John Manley. I'm CMO of Formidium. I've been with the organization for a little less than a year now. And I was really drawn to Formedium because I was, my personal mission in moving from being in a career of advertising and marketing all of my career, over 30 years, I was looking for a company that was an innovative business that was looking to become a beloved and trusted brand. And that's what I find in Formedium. The opportunities are rich, especially in blockchain, as we've discussed. But that's really what drew me here to begin with. And feeling the energy that is in this organization, but also in these panel discussions, has really just excited me even further about this opportunity. So thank you for welcoming me.
Hello, everybody. As well, I want to thank you all for coming out. It's such a great to see so many people at this inaugural event. So, my name's Chris Meter. I am Executive Vice President and Head of Fund Administration for Formedium. I've been in the fund administration industry all of my career. I've worked some big banks. I've worked at some very large administrators. I've worked in the Bermuda and the Cayman Islands and some smaller administrators as well. I've been with Formedium now for over 4 years. I really enjoy being at Formedium. I've learned a lot. Obviously, throughout my career, I've never really dealt with digital assets or blockchain prior to coming to Formedium. So really, that's the big appeal to me, is there's something new every day that comes across my desk that I have to educate myself on or reach out to some of our subject matter experts to learn better. So very happy to be here, very happy to represent. I'm a Boston native as well, if any of you are curious. So I'm happy to be in Jaipur as well. I love coming back here. It's a great city. This is my 3rd time here in just a year. So I really enjoy it. I enjoy the people.
Thanks, Chris. Sachin, we'll go to you next.
Hello, everyone, and thank you for joining us. And literally, I see the very good people and the conversation around happening. My name is Sachin Kumar, and I'm the founder of Jumbo Blockchain, based out of India, the only one based out of India, registered in India. And we try to solve like bigger challenges which are out there. We applied 3 patents in the improvement of the blockchain transactional data distribution processes. And the last part for us, our native token is the fractional of our real world digital asset, which is our IPs and the part of the balance sheet. The only blockchain on this earth who has done that. And next is we have a block finality time less than 300 milliseconds.
Okay, that's great. So I'll quickly introduce myself. So my name is Gaurav Ketrapal. I run a small consulting startup in Jaipur. I'm a Jaipur native, born here, brought up here, married here, had kids here, my company is here. And that's probably one of the reasons I'm here. I'm very active in the local tech community here. I run a couple of groups for Salesforce and Google Cloud. I'm not a blockchain specialist. I have done a lot of work in the initial days of IBM Hyperledger, but I have some familiarity, and I was kind of listening in to all the thought leaders who were kind of speaking here. So I know this is the last session. There is a closing note after this, and there is lunch. Anytime I see hungry faces, I'll take that as a cue, or the other cue is you can start clapping, and and we'll wind up. But we'll try. No, not now. But we'll kind of make it interesting. I know a lot of the discussions, as much as they were enlightening, it was very, very heavy, especially I met a few students who are also here. So we'll try and keep it engaging, and we'll try and keep it interesting, and hopefully we'll all go back after the conference with some learning. So before I get to the heavy duty stuff, Chris and John, because you've been in Jaipur, and Jaipur is known for food, what is the most unique or the most memorable dish that you had here? And because lunch is around the corner.
Obviously, being an American, I'm non-veg. So I think lao mas is probably been
I've
my
heard
one,
that a few
obviously
times.
traditional dish to here. I really enjoy it.
Okay.
One of the things I look forward to.
Okay, John, what about you?
I'm a big fan of Indian food before coming here, and I'm a bigger fan now.
Okay.
Garlic naan is definitely
Okay.
my go-to. It's nothing new to me, but the version of it here is delicious. Butter chicken is always a favorite of mine as well.
Yeah, you have kind of raised the audience expectations for lunch, but we'll see
Delicious
how
and
that
savory butter chicken.
Yeah, we'll see how that plays out. So Sachin, we'll actually start with you. So tell us a little bit about like Jumbo blockchain and how it cuts across the use cases of like HR, operations, marketing as it relates to blockchain?
Thank you. Basically, as technology, blockchain is just storing the data in a very different way. But when it comes to the processes, when it comes to the specifically to the HR processes or the supply chain management or any operation or processes, there are certain data which you can't directly put on the blockchain. Like if in HR process, if I am issuing an offer letter to someone, I cannot put that offer letter out there on the blockchain. But what I can do there is I can bring an immutable hash and link that to the document. And document will be stored with the only two parties, the organization and the individual to whom I have offered. So that immutable will make sure that there is no background check required for that. Now it becomes immutable. Again, for the rest of the processes, like I'm working with your organization say for 5 years, then every year I'm getting my increment letters, promotions and other things. And then lastly, when I exit from there, then I'm getting my experience letter and the exit letter and everything out there. And maybe the last 3 months salary slip. So this is the use case basically where I cannot publish the data on the blockchain, but I can bring the immutable hash around it. And that will make sure that the data you are sharing with the next organization is the authentic data. So now there is no background check required. So it's a pre-verified information you are providing. So it is saving time, it is saving cost, it is saving the resources which are required to do all the processes. So that is one of the big use case for us, a big market size. Let's come to the operations. The operational efficiency when it comes to the supply chain management is one of the key factor. The people has tried it like track and trace, but never given the power to the end consumer to identify the product is the counterfeit or not. Again, big use case, $4.5 trillion worldwide, and we have built it out. The third one for us is in operation efficiency itself. All companies which are listed all across the globe has to submit the ESG reporting. And ESG is having the very key factors around it, like water consumption, natural resources consumption, either it comes to electricity, water, or any other thing, how much pollution you are providing. Those data are kind of fuzz data, not completely accurate data, where the IoT and the blockchain can integrate together and create value for the organization when it comes to the improvement, because now that is the validated data on the public blockchains. Because you are a listed company, public company, that information has to be public. So these are the 3 use cases where we are very focused on, already worked on that. We have already done the POC for a NASDAQ listed company, and now we are moving forward.
Okay, that's great. So, yeah, something you want
to
add?
Yeah, I'd love to, the first point you put around HR, I just wanted to also mention, because that's one of the things, we talked earlier a little bit about AML KYC on blockchain, and okay, well, how would AML KYC really work on blockchain? I don't want everybody in the world to have my personal identification information, but it's coming up with a private hash where you essentially put your stuff on the blockchain, and then you go to your bank and you share that hash with the bank. You go to this bank, you share. So you just think about that process alone. Today, there's a number of vendors who are building it. I wish we could come to some global standard, but today our processes, the people are sending us stuff via email. Some of it needs to be certified if you're investing in a foreign fund. So, because again, it's a copy. Is that really a true copy? So you have to get some accountant who your investor goes to with a copy of his documents, signs it and certifies. Then they need to scan it. Then they need to email it. And then you tell them, you need to do that again when your passport expires. So just to be able to have that all up somewhere, where an investor could come to us and just say, we permission Formedium to our data, we could then download that, maybe even download it and put it into our platform, or at least see that it's been approved, and that will just create that efficiency. And then you think about that as just one use case, and then you're like, how, the opportunities are vast once you start thinking about that. Where is there a middleman involved that we can eliminate the middleman? Where is there processes where people are passing documents manually or via email, or even sometimes still via fax? How can we get more and more of those processes? And again, some of it's trust, some of it's transparency, but some of it's also, removing transparency. It's somewhere you can build that blockchain so there is no transparency, and it's only transparent to those people who you permission. So that's what we're seeing. That's where we feel, we're going to find a lot of efficiencies down the road.
Absolutely. At the end of the day, it's all about efficiency, and whether it's blockchain or any other technology, the crux is efficiency. So John, we'll go to you next. Like, we often hear blockchain and it's kind of considered as a parallel in terms of financial services or investment or crypto. It's very, very rare to actually hear about blockchain in marketing. So since you have a fancy title of a chief marketing officer, can you enlighten us, like, where do you see blockchain fit in, like, in the marketing world?
Yeah, absolutely. There's actually two applications that we look at from a marketing perspective in Formedium when it comes to blockchain. One is a practical application of blockchain, which is more in theory, but we've taken an approach to our marketing that we call decentralized marketing. And so, as a business-to-business company, a lot of you that work for one of those, you realize that everyone in your organization is in sales. Everyone in your organization is in marketing. So how do you empower your individuals who represent your brand every day, every engagement with the client, every potential client that they talk with? You want to make sure that they're educated, that their position is well understood, and that they're communicating those points clearly. So that's kind of the functional application. We take brand kits across the 10 different business units that we have, make sure that every one of those business unit teams is equipped with what they need to do those kinds of outbound communications. So that's kind of the practical application. The second, the more important, frankly, is marketing as communications. All we've heard today, and it's all the points I really wanted to drive home, and maybe this is a nice sum up given that we're getting towards the end. There are 5 key points that we really look at from a communications point, right? First, build the trust, right? There's been so much, as we've talked about, all the frauds. I saw a statistic, $1.8 billion was lost to fraud in 2023 in blockchain. Now, that probably exists in TradFi times 10, but you don't hear about it because the media isn't really hyper-focused on that piece of it. So you have to overcome that trust issue. Education. Not only educating our clients, not only in our case educating our people to educate our clients, but understanding that a lot of our clients are very sophisticated in this space, we want to help them to educate their clients. So when we look at it as B2B to C, right, business to consumer, if we're helping the businesses to buy us, we're helping their consumers to buy into us. And I think that's a really key part of it. I said 5 points. The third, I promise I'll get through these pretty quickly. Adoptability. So this is one where we see kind of the virtuous circle of when consumer perception starts to elevate, so too does the business application of it. And as the business application builds, so too does consumer perception, right? It's a nice cycle. Right now, finance represents the highest market share of any industry that is adopting blockchain. It's a 30% market share, I believe. So that's going to continue. We have to be in that space. I saw a statistic that said 86% of people in business believe in blockchain doing something good for their business. However, there's only 4% of a application of it right now. 86 to 4. That's a huge gap from a communication standpoint that's critical. And then scale. Everyone loves scale. So
absolutely. Yeah, great insight. So since you brought up and we are discussing kind of the various use cases. So how many people here are from a financial services or fintech background? Raise your hands. Okay. Any marketers, any people from a marketing background? Very few. HR people in the house? Okay. And then HR, finance, operations? Okay. How many software developers in the house? Okay, majority. So these are the people who always come to conferences for free food. Never changes. That is true for Jaipur as well. No offense. How many of you actually work in blockchain? Okay. How many of you have never worked in blockchain? Okay. Can we take a picture of these and ensure they don't get the food? But we'll kind of cut across to another topic, which is again staying on HR, marketing, operations, and I've been in the technology industry for about 25 years, and looking at the number of gray hair you have, I'm assuming it's similar for you. And each technology has its what we call as a hype curve, or it has like, we glorify a certain technology. Right now, maybe 2015, 2014, it was blockchain. Right now, it's generative AI. Are you seeing an intersection of generative AI and blockchain in marketing, operations, finance?
Oh yeah, definitely. We're seeing it everywhere. I think there's a direct. If you're not connecting AI to blockchain, then you're really not taking the advantage of the blockchain. So I think, yeah, I think identifying how those tools can enhance those products as you build it, helping you to enhance your development, right? Running, using AI for that. I think, yeah, there's definitely a direct correlation between the two.
Yeah, the way that we think about it too, keep it short, is the practical application of AI as it relates to how we communicate through social media. We've taken an approach of using 3 AI systems, Jasper, Canva, and Synthesia, to be able to do a lot of AI messaging among a very small group of people that are responsible for it. So being able to get those messages out quickly and accurately is really vital. So that's how.
And it's only going to get better. I think, I've seen it in a short period of time. I remember the first AI videos I'd watch, I'd be like, something's not right. Either the lip syncing's not up or the voice just doesn't match the person, right? And now I'm seeing that, and I remember hearing that, yeah, there's no light in people's eyes. Sure. Right now I look at the video and I see there's specifically light in their eyes. Their voices are starting to match up. So I think as any technology, AI is going to evolve as well, and it's just going to, there's going to be much more opportunity.
Absolutely. Sachin, your insights on this?
So I have a very simple say and a very big use case as well. See, right now any organization who is selling their product into the market, they have the information about the district level, not at the local level or for a particular community level. What if you integrate with the proper solution where the data can come from that level and AI can analyze that data and provide the the faster information to organization to strategize to sell their product according to the locality in the community and the other things. That is something which will bringing the super ground level data to the organization to build their strategies and grow in a faster way, in a very competitive way. That is one of the very big use case where I see the integration of the blockchain, AI and the blockchain based use cases to the enterprises.
Okay, excellent. And I think we are just about, and I'm seeing people kind of drowsing in their chairs. So if there is one last takeaway that you want to give to the audience from your side in terms of like blockchain and in terms of these domains and looking at the future where like Gen AI is still the next big shiny object, what would that one piece of advice be?
I think be persistent, but be patient as well. We know that we're still in the early stages of this, and if you look at any other big financial moments that have happened over the years, they've taken a decade or so to really mature and develop. So I think be patient and persistent, and just keep iterating and look for those opportunities to partner with companies where you have commonalities and create your own blockchain in essence of those companies. That's the way to really scale in this area from what I see. And across our countries, from India to US, there's such tremendous opportunity there.
Absolutely.
And my advice would be to tinker and play with it. Check it out, right? Go. I even just ChatGPT. I love looking at some of the people, some of the ways to use ChatGPT and asking ChatGPT a question in many different ways, right? Or there's obviously fun ways you can use it. Have ChatGPT write a song about something or whatever. But check out some of those tools. Check them out. A lot of AI, is also open. So open AI, right? So it's that whole concept of you don't have to pay for it. You don't have to do it. So don't be afraid to just try it out and play with it and see what you can do. And even when you're having challenges in your own career, challenges in your courses, challenges in anything, I'm not saying use AI to cheat, but use it as a reference like you would the internet today. Rather than going and searching Google, try having Chat GPT or some other AI tool that can search for you and maybe deliver you better results than just simple, Google Chat.
Absolutely. Yeah. So I talk about very practical examples out here that we have so many problems which are not solved for a very, very long time. Every problem cannot be solved by blockchain, but there are certain problems that can be solved by blockchain, by using blockchain. Let me give you the recent example of yesterday. There was a roof collapsed in Delhi airport. And the problem is that that was not completely tracked and traced, and it was not transparent when it comes to the execution part of that particular project. And that is one of the reasons it has been done in that way. That is something which is a very practical example where government should think and work in that direction to implementation in execution of the projects, basically, if specifically to infra or where human life is involved. That is very important for everyone.
Absolutely. Great advice. So I think we are kind of running out of time. So thank you for staying awake in the pre-lunch session. I'll hand it back to the Formedium team. Thank you so much.
Thank you so much, panelists, for highlighting the versatility of blockchain in all these domains. And we really hope we are going to see more of it in future. Now, can I please call Rob Naka, EVP Formedium, to felicitate the speakers? Thank you so much again. Now I would like to call Aishwarya on stage for her closing remarks.
Hello, everyone. Ladies and gentlemen, as we conclude this incredible event today, I want to take a moment to express my heartfelt gratitude to each and every one of you. This gathering has been a testament to the power of collaboration, innovation, and a shared vision. A huge thank you to our esteemed speakers and panelists who shared their knowledge and insights with us on blockchain today. Also, a very big thank you to our amazing team for all the hard work and tireless effort that made the event a success today. Lastly, I want to thank our wonderful audience for their presence. And once again, I want to thank everyone for joining us today. And now let's continue these conversations over lunch, which is ready for us now, by the way. And a friendly reminder, please don't forget to collect your swags at the registration desk. Thank you.